Okay. Let's get this thing going here. Hey, good morning. I'll just wait for something good to happen here. Or something bad, I guess. We'll see. Yeah, I'm not a huge fan of this double top business. But maybe good news. So we're getting that RSI pull down again. Well, technically, I can't really tell. Hang on. $523. $525. Well, that's probably a big part of this drop right now. So we're getting a nice, I want to say nice, we're getting a real low RSI pull down on the 6 minute, which isn't, you know, I've talked about this, not like the end all be all, but like it's a typically a pretty good indicator when you're that low on the 6 minute that you're going to get at least a temporary recovery. There are times where that doesn't happen, but usually it's a pretty concise one. And you could use 5 minute, you don't have to use 6, but I use the 5 or 6 and I look at these little inner parts like 33 and then about 3 up and 3 down from the top as a potential turning point. So this looks like that to me. So even in like the most tumultuous of times, like back here when we hit these lows, even in those times, like the 6 minute was a pretty good indication that you were going to turn. Obviously in the grand scheme of things, if you look back at the earliest divergences we had here, you know, the price is coming down, RSI is coming up, and at the end of the day, it doesn't really break too low here before it takes off. I'm just kind of showing you what I'm seeing. And so when I look at this, I'm like, yeah, even, you know, in some of these cases, like this, for example, I think this is the first RSI hit. It still has a nasty second plunge. It's almost it's a huge move down. So it's not always like 100% reliable, but it is a very good indication that you're at least going to get a temporary move back up, if nothing else, before you go back down. But in large part, it's a really easy way to, I mean, it is in large part a really easy way to trade if you're just swing trading. So the reason I'm looking at it now is because it's been widening, and the points of contact have been farther and farther apart. So this is the widest we've been, arguably. And in some ways, it's not like in the instance we were just talking about a minute ago, like you have that early reaction, maybe here, you know what I mean? And then it pushes back down and ends up dropping really low. This is like peak volatility, and we're in a very like choppy range right now, and we're sitting really low. So typically, you know, if this were like a UT with a UTAD, I'd be looking at it saying, well, you know, it's probably going to go down, and what we would expect to have happen would be the breakdown right here at like 460, and then sliding through 446, which is our ice level. Just based on this setup alone, I would say that it's probably likely that before, even if we were to continue down, we're probably going to see it come back to 490 before anything else. And that does mean, again, that 482 level, which has really just been more or less like an anchor for, frankly, for like the sine wave, I don't really feel like it's acted like much of a support at times or, you know, resistance. At this point, it's pretty much being ignored. And so even though I've talked about it quite a bit, I think it's more of like a central liquidity grab at this point, if that makes sense. Like if you go backwards, the reason I had originally marked this off was there's a backwards test on it back on Monday. So we did a back down when we did a pullback here as an LPS, right? And then it advanced again. And when we came back down, that's also the level at which we anchored ourselves before we dropped into this lower region. So you can see right here in pre-market, or excuse me, yeah, pre-market on Friday, May 17th. It's the same spot that we dropped down. And of course, you know, there's a lot of other hits on it. There's other things here that would indicate that you might, you know, use that as a support level or resistance level. And clearly when we came back up, I mean, it was really obvious. It was used as resistance. We had one attempt to get above it and hold support. It failed. We drove back down. Once again, we checked like the supports. So this was on Thursday. So you had that pullback to check supports. And then again, you advance again. This time you go a little bit higher, but it sells off pretty fast. And you end up with what looks to me like a distributive top. You have like a UT with a UTAD. I mean, it's not quite that simple. You could look back here and you could basically see the exact same thing. So at this point, we've done it 1, 2, 3, 4 times above 510. So much like what we were talking about with 485, you know, a week ago, or at 510 now, you've got the same kind of problem where you continually trying to advance and you're kind of bonking your head on that level. There's a lot we could say about like bigger picture creeks, and I want to get to it today, hopefully, but I don't want to mess with my chart right now. I'm in the middle of something on my big chart. So it's a cycle. It's really kind of important to me that I finish it. So it's part of the reason why I didn't do a video yesterday, because I was very preoccupied with that. In terms of advancement, we were talking about like 545 basically. That was sort of the upper level here. It's not impossible that we get back there even today, I don't think, but it's at this point it's important to just kind of look and observe like volume levels and see what's happening. So if I were to marry this volume to the left, like where would you put it? I'd probably put it here. So right now, what I'm looking at across here is there's a pretty specific range where we keep having like the same kind of ups and down knockdown. It really started back here. And so even though I've been talking about that 482 level a lot, really like 510 has been kind of an initiator for most of our major sell-offs here. So if I go back and I look at these 3 major push downs, they're all pretty much from the same level. They're all from roughly 510. I mean, this one was more like 505 or 5. This one's also like 505, you can see. So if you want to like pick one, you could say maybe 505, but so they've all been pretty much from the same level right there. And then going backwards, you know, we see that the first time that probably was the case was over here back on Thursday, the 16th. And then so there's 2 markers here on this guy, down and down, that again signify like major areas of supply, where people are trying to sell and keep the stock from advancing. So part of the reason why I wanted to sort of see that is because I'm curious about other things as well. Like, so when we have these setups, and this is maybe a little too heady, you could just keep it that simple. Like, oh, if it gets over 505, we probably are going to advance. And if it can't, then we may be in big trouble, especially if this breaks down. Because at this point, you're starting to see how it could become like a rising triangle, which could break either way, just like a flag. And the targets for that are self-evident. If you want to go look them up, you can look them up. But usually it's about the length of that flag. If the triangle has a really long pole, or the flag has a long pole going into it, you can read more into it. But typically there's like a limit, time limit. Like you want to have a longer period of time than just like 2 days or 3 days. That's not a very reliable measurement. So the speed of this move means that the pole measurement isn't exactly the best way to go. Like if you had like 2 or 3 weeks of a pole and then you had a flag, you can use the pole to help measure a potential second move. In our case, we know AMC well enough to know that if it were to break down, yeah, we probably have something similar to this first move right here at the end. But that's just because it likes to kind of build it out long enough to get that move. Either way, you know. Anyways, the reason I'm talking about this backwards period over here is because this is the area, if you remember, and I know that my chart's getting messier as I add stuff, but this is the area that we really entered the range and that we set up all of our levels, right? So all of the levels that we're dealing with here, going back up through this, are all set up previously, like in this entrance area. And that's important because a lot of times when I'm doing analysis on a bottom, and we've probably not done this in a long time, but I've been drawing the same kind of bottom structure here for y'all. And one of the things I haven't really done in a while is talked about this guy right here as a setup. There's certain like parallels that are established when you first enter a range. I think I did this when we were back in August of 2022, and then I think I did it on that second drop down when we after the August run up. Yeah, anyways, so there are these parallels that are set up when you base, and that first M cross ends up being pretty important to that structure. So maybe that's something we can do today if we don't see a breakdown or a breakout. If we just kind of chill and we're not advancing, then I'll do that. I don't want to like do it while the stock is indecisive like this morning, because it's first thing. You know, it's been an hour since open, but I still think there's time. So maybe within the next hour, if that doesn't happen, we can go back and check that. So I would have identified, the reason that's important is I would have identified this as a really critical potential marker. And going backwards, it's probably similar. Yeah. So right here, you can see there was a double flush on it as well. It's like halfway across this setup. So I don't know what the significance of that is at right now, but I can tell that there's an M cross here and that once again breaches below it. So it's a similar kind of situation. And that's where it's shared. So those markers could be significant in the future, but I'm gonna hold off on that right now. So I don't want to go too crazy on that. You will want to know what I'm working on in the big picture if you're interested in AMC. All I can say to you is that it's probably like the most bullish outlook I've ever done. It's long term up to 1700, which is pretty insane. This is long term. This is like 10 years from now. So don't hear me wrong. But there's a reason that this looks crazy. I know that I'm known for the spiderweb thing. I get it. It's funny. But at the same time, I mean, it is. This cycle stuff is possibly like the most, I don't want to say the most, I always say like this is the most important thing. But there's something that I was messing with. So MPW is a completely different stock, right? And you know, I've been following it because I'm interested in this. I've obviously invested interest in it at this point. But like, it's a medical properties trust, which is a real estate investment trust fund. And when I went back and looked at this, you know, it has a lot of the same movements as the S&P. So for whatever it's worth, you probably could do something similar to this on the S&P, But I noted that there's a 201 bar cycle here, and I specifically am on the week, so it's a 201 week cycle. So not quite unsurprisingly, 200 weeks would be close to like a 4-year cycle. 52 weeks in a year. So why not just make a 4-year cycle, Booksy? Well, I think it kind of is. I mean, I don't know exactly why the 201 matters, but I do know that what I found was almost disturbing. Like, maybe not in a bad way, just like mathematically, it's one of those things that basically like 200 bars away, you're kind of still tracking the same trend. So it really is like almost like a 4-year trend that's established once every 201 weeks, which is really bizarre. And I thought it was perhaps a fluke. So what I did is I went and I looked and I said, well, they're completely different industries, but I like to sort of take everything back to see if AMC, it looks like we popped over 484 again. That's good. To see if AMC had something similar, and it does. So I'm going to talk about that at some point in the near future. But basically, here's the good news. If you want some really good news today, this is a bottom cycle, and most of these bottom cycles actually bottom before they get to this particular marker. But basically what happens is that you bottom out and then you establish like a new trend and you finish an old trend. And I think I've identified on MPW that on October 7th, we should be at 797 to 820. Like, I think we're going to open or close on one of those values, which is an extremely silly call out. I know, but just to try to be that precise, but I'm fairly confident in the way I set it up, why I think that's the case. And I'll have to get to that at some point today for sure. It's a pretty amazing chart, even though I know it looks like a mess right now. It's actually pretty amazing how clean it is. It's very simple. It might look complicated, but it really is just like 1, 2, 3, 4. I mean, you can kind of trace it through. And these trends end up being really important. And I found a way to kind of, I think, triangulate the next one. So my thought is that that's a strong possibility. It's not the only possibility, but this is a strong possibility for October, at which point, there's not really anything that says you have to continue straight up, but then it implies like the next one. So we'll be on an up cycle then in the market for the next 201 days, going into August 14th of 2028. So that's a really positive sign. And just like what I was talking about with AMC and some of these other stocks, a lot of these stocks have had really delayed, like they've not been bullish, right? While SPY has been bullish. Like they've been going down or having a really slow breakout. And I think their turn is coming up. We've talking about the small caps a lot. I think their turn is coming up for that rally effort. But I really think that it's probably going to depend a lot on the rates and all that jazz. And again, we'll kind of get to that. AMC's at 487 this morning. It's had a bottoming that basically came back down to that rising channel. Volume on that sell-off was really strong, and I think that's very important. It's a similar level from that 505 that we've been talking about. I'm going to go ahead and call it 505. I know 510 is technically more of like a top, but we're really selling off from 505 with the strength. So much like where we were at last week, I would say that we didn't get the confirmation I was hoping for. I was saying that confirmation needed to come above in this yellow pocket here, which you can kind of see like how that didn't work out. We basically sold right off from that level. So at this point, I'm going to go ahead and delete these. That setup's gone. We still have a possibility of breakdown here through this trend. I think if we do break down, it'll probably be pretty ugly. I mentioned first thing this morning that we probably come up to about 490. Well, didn't I say that? Did I say 490? I don't know. I think I said almost 5, but whatever. Come up to this level because of RSI being kind of oversold. This sell-off looks really heavy when you zoom out and you kind of look at the bigger picture. It's not that it's not a heavy sell-off. It is, and it could be the start of even more. So you always have to keep in mind, like, this is just one hour, basically 1 hour period. But we've had multiple sell-offs throughout, and you can see I marked them off of these little red areas from the same level. And I don't know if they're really increasing, but they've been fairly consistently like the same amount of volume each time, almost as if somebody's kind of exiting, you know, within that range here from 505 down to 461. Like someone's getting their orders filled in almost even increments. So I'm not super concerned when I zoom out because I'm like, well, it's sort of still indifferent. Like you don't have confirmation either way. It doesn't look great coming over this top twice, just like it didn't look good coming over this multiple times. I would say this 505 seems to be a bigger headache for us than the 482 was. And especially when you look at where the selling is taking place, there's a lot more selling taking place right off that 505 level. So that's where we're at there. We'll get to the big chart on AMC. Yes, you heard me right if you heard me earlier say that I think there's a possible $1,500 price target, but it's like 10 years off. And I'm not fudging it. I'm not going to like tell you it's like sooner than that because I don't think it is, but there's a reason for that. And I could talk you through it later. But locally, this is also really positive. There's a strong enough chance that we're in a downward cycle, which is kind of strange, and we would be going into an upward cycle. And I think we could see a return back to near previous levels at like 245 over time again, and then that's like a 4-year thing over the next 4 years. I think short term 90, that first target I got was hit again. Again, I could talk about that maybe a little later. So I'm going to keep the AMC price on the window here so I can see it. So GME, again, very similar in some ways to AMC. You know, like typically, if I'm looking at this, all I'm really thinking about are two major trends here. So did it end up coming back up to this point that we identified as potentially really important? Yeah, I think that's done. I don't really think there's much else to think about with that. I wouldn't want to stretch this way out, but I would say it's like right there. So I think we've kind of hit it. I don't think there's anything else to say about that 2080 mark. Other than it's at this point it's probably there, and that's that. So I'm going to get rid of this diagram. So there's two major trends I would want to look at here on GME in this current time. So I'm going to get rid of everything else except for those, all the local stuff. We can get rid of that one. And I'm going to keep this one because it's the resistance that I figured we'd probably hit, and we did hit it. Almost all of this action happened in pre-market. So much like AMC, you had this kind of a early morning pre-market shuffle above the highs, and then it retreated. By the time the market opened, it was ready to dump. AMC did the same thing. It already had early advances above 510, and then as soon as the market opened, it dumped. There wasn't really opportunity to like trade those highs unless you have extended hours trading on. So at this point, yeah, has GME advanced above the lower range? I mean, that's one of the big questions. I think the answer is yes, it has. It pushed up high. It even almost hit this intersect pretty perfectly. Again, interesting, but not something I predicted. It's just something that happened. So, two levels. So one would be this green guy. So this would represent, as you can tell, we had this kind of flat top. This would represent like a creek, like a really, really distinct one. So like anytime you have like a huge amount of trading sideways and down or sideways and up slightly, just keep in the back of your mind that in a lot of your Wyckoff schematics, and I'm a fan of the Wyckoff schematic, right? You do end up with like kind of a chop. Oopsie. You can pretend like that's not screwed up, right? You do end up with kind of a chop along what we would call a creek, which is basically, it's an establishing resistance in the case of a bullish accumulation. Like you're basically forming it's a resistance that's not necessarily, it doesn't even necessarily have to be tied to like another part of so it could be its own trend lower or whatever. The point is not that it has to connect perfectly like a trend, but that's where clearly you're having supply dump or you're having problems advancing, right? So I tried to clarify that last week. Someone had asked me the difference. In this case, it basically looks like a trend. I mean, it's super tight, but it doesn't have to. I guess what I'm trying to say. It doesn't have to be that tight. So we would look at this and say, okay, so what does that tell you? It tells you that we were having a lot of trouble advancing. So what I would do is I would look at these particular points back here, and then I would look at the last major point over here. And again, yes, could this be drawn almost as a creek or as a trend? Yeah, in this case, it could. But you also have to remember like the angle at which these set up, because that means that the creek is probably higher. So if I drew this as like a trend, it would make me think that the creek is like way down here. Now, is it possible that this pulls back down to here? Yes. And is it possible this acts as a support? Yes. But because this was trading sideways, and it was very like shallow, so to speak, right before the drop, that kind of establishes like a stronger creek, because these two are just early hits. They happen not even in regular trading hours, you know. And the rest of these, at least two of these were, well, 1, 2, 3 of these were in, 4 of these were in regular trading hours. So I'm kind of looking at it like this is like a volatile shakeout period early in the trend, just like we were talking about with AMC. There's like an early move coming into the trend that sort of establishes some of the strengths and weaknesses you're going to find later. But then ultimately, when you enter that range, then it starts kind of leveling off. So again, I think the creek would be then higher. So then the question is, like, did we hold the creek when we jumped up here? Thus far, yes. And so for GME, it's not really a question of like if at this point. It is more of a question of, all right, how long, right? Or are we going to continue to hold it? So there's two major markers I would look for. So one is this downward one, and the other one is the upward creek. Now, technically, I've got a line drawn here that hasn't been broken. You can see that pocket. If you look at the horizontal from, we'll just call it the liquidity center from previously, we're kind of sitting right on it. It's like 2150. So when we're talking about horizontal support levels, that would be one. Again, we distributed from it over here. We sold off from it. So if we held it now, that would be pretty strong. Yes, it coincides with the creek. Not complicated. I would look at this other line, though, and I'm going to see if I can figure exactly where it is real quick before we go crazy on this. So I think the steeper one usually represents kind of where you're going later. That would be this guy. So there's always like a steep one at the very, very end that typically gives you a picture of like where you might end up later on. So this is, again, sine wave theory. So you're going down, and as you're going down, there's a build out in their programs, the algorithms that run the market that kind of define where that resistance may be later. So it's like leaving a last kind of trace behind of where that resistance may end up being later, and then you can see that pullback and the advancement back to that same area. Obviously, it usually coincides with some other major trend, and ours does in this case on GME. But what I'm going to look at here very simply is just like where is what I call like the cat ear line, right? And I would actually put it a little bit lower. I think it's like right here. So we've got a bit of a problem right now, which is that GME is kind of sitting underneath it. So now if you imagine, I know this is like a cumulative thing for a lot of us, so it's like hard because I may not mention the same things every single day. You have completely different people on. But if you imagine the sine wave diagram that I usually draw, this would be like that main cross right here. Not actually this lower guy, although sure, like that's part of it. It could act as a support, and it did, at least for now. But really these two markers. So if you're going to draw just like two lines with those horizontals, these are the two, right? So what you don't want is you don't really want to see GME get kind of stuck in this middle again, because that would represent us being stuck in center liquidity again. It would represent us being in the midst of this area right here. A possible breakdown, because once you break through here, if you come low, that happens only in distribution. It doesn't happen during the accumulation cycles. In the event of a throwback, we already talked about, yeah, I mean, potentially we could flatten this out and it could come down pretty low. I think that the creek should be higher because of where these guys established higher. So that's why I pulled it up a bit. But this is historically where you see like the advancement happen, if it's going to happen. So in the event of the hook or the breakdown off the foretop or whatever we want to call it, you want to see it advance back above that last prevailing rising creek. Not kind of unrelated, but very, very close. We didn't get either of these quite right. This one didn't come quite as low. So you can see like it came down, it was targeting that gap. And remember that we did these targets on that diamond, which really in some ways looks a lot more like just like a wedge. And I mentioned that you could have like a double wedge or a double breakout where you break down, hit one target, and then break back up and hit the other. I kind of said it like flippantly, like I didn't think it was very likely to happen because it just doesn't happen that often, but it's kind of similar to what happened here. So we ended up getting like, so, you know, why did I leave it on the screen? Because it was incomplete. Like, I guess that's the right way to put it. Like it was not definite, like, oh, it couldn't happen, it just hadn't happened, so I just left it on there. But it seems like that's pretty much what happened here. So we ended up with a flush down and then a flush back to the upside. And I did derive this without extended hours on. So without extended hours, I was using this as like a diamond. And I used the top to bottom measure of the diamond. And then I measured from the breakout point, not from center liquidity per se, but from the breakout point. But yeah, I mean, is it pretty close to, you know, this movement right here? Yeah, that's pretty close. Keep doing that. Tried to double click. It didn't quite make it all the way, but pretty dang close, right? So not bad. Not bad, Booksy, not bad. At least I know I did it right. When stuff like that happens, sometimes it's hard to know if you're getting the measurements correct. You're measuring from the correct point. That's always tricky for me, especially with the diamond, because it's like sometimes it breaks out and then it has a throwback and it comes down lower. And usually you're supposed to adjust your target down. And I think that happened in our case because I think it broke out early and then it came lower. But I don't think I ever adjusted them. I think I just left them. And if I did adjust them, this would have been lower. So I don't know. This would have been way off. So who knows? So hopefully you're catching what I'm throwing at you. Basically, we got the double flush. And we were right. So that's good. Did I make bank on this? Not really. I mean, like, I played no downside on GME. Like, I didn't play against it. I didn't hedge it. I sold shares, you know, here. I bought some more down low, but it's really just a swap. Like, I just traded out some shares, some profit for shares. That's all I did. So I wasn't like swinging this, but you could have swung it. I don't think this is very predictable in my opinion, but if you were going to look at this as a gap fill and then recovery, I think this is probably a decent thing to remember, you know, maybe. It's interesting anyways. Maybe there's a thing there that we could use. The only time I saw AMC do this was like a similar thing, but it wasn't a gap fill. It was just like a bottom and then it recovered. So maybe there's something to that particular structure that does happen. You know, I don't know. It's just a double flush structure, you know. So you get two two targets and they both end up being fulfilled and then you just see what happens. It's really strange. I couldn't have predicted it is what I'm trying to say. Like I kind of did, but it's just because I was thinking about the gap fill. But I don't really know how this normally plays out, if that makes sense. Like maybe there's another name for this, you know, because there's another bottom. It's called an Eve and Adam bottom, and it could be that because you had like chop here, and then so that's the Eve, and then the Adam is usually like this big reactive move afterwards, and that's not even like a diamond plus, you know what I mean? It's not a diamond plus a double break. It's a completely different breakdown pattern. And in this one, it's the same thing. Like once you come above and you make a new high, then you have to establish support. And if you can establish support above where the Eve bottom had support, then you see an advancement. And that's usually the measure of, I don't know, we should look it up. Because if that's an Eve and Adam bottom, maybe we need to. I did a video on that bottom because it shows up a lot in the market. So the Adam is the pointed one, the Eve is the flat one. I don't know why, but that's just the way they were. It's the patriarchy, man. Maybe. Probably, actually. I don't know. Oftentimes there's like a handle on the top. I know that's the case for a lot of these. So I don't want Adam and Eve. I want Eve and Adam. So the Eve and Adam. Eve is flat. Yeah, but usually there's a rise. See, this one doesn't even have a rise. So I don't know. I don't think it's the same, but I don't know. So basically it has a tall left side, steep decline. Now expect price to return to where the downtrend began. Well, it already happened. That already happened. It did already return. This would be where that downtrend began. It already came back to the beginning. So that's part of that. Yeah, I'm not really seeing that as a... I don't really see this as the best way to do it. But a lot of the time in these chart patterns, like, it's okay to just try it out and see what the target would be. Yeah, because in this case, the breakout should be... I like this one a lot. I like this example he gave. The breakout would be... It didn't really happen, though. We didn't really get an upthrust. It would just be above here. I mean, it would be above 2188. So it's sitting on that same support. I mean, it's that simple. But I don't think this is the best example of one, is what I'm trying to say. So if you were to use it, it'd be either that or 2423. I don't think either of those is necessarily the best. Anyways, let me try to find the target for it, though, because sometimes the targets end up being pretty accurate. So yeah, a lot of times you get like a handle, so that would be like this, and then it chops sideways. In Wyckoff, we would just call it like an SOS with a backup or or something like that, like before it advances. An SOS can go on for a while if it's an SOS. And if it were a distribution, you would call it like a UTAD. If it's really flat like that, usually that doesn't happen on the UT. It just depends on that early move. And this looked pretty healthy, so I'm trying to get to the point here, but I'm reading through because I don't remember every little thing with the data. So you want price to close above the peak between the valleys. If you don't wait, there's a 48% chance that price will continue lower without confirming the double bottom. Right, so you want to wait for confirmation price to close above the peak between the valleys. Valley 1, Valley 2. Yeah, so I would say this is a bit tricky because it kind of peaked and then went sideways. It didn't go sideways, then peak. But I would say that confirmation would be a close above 24.20. Kind of makes sense because look at where we fell off over here. So that's a almost 50% chance of, if it doesn't advance above here and close, that it could just end up coming way low. All that is statistics. And if you're wondering why Bulkowski's methodology does work or doesn't work or whatever, it's all based on statistics. So these numbers are based on, in this case, for the even atom bottom, 759 perfect trades. So that's a pretty huge amount of trades. So his methods are, people question them a lot because they're like, well, I don't like chart pattern analysis, but it's just statistics. Like he's just telling you statistically this is what happens. And he's basing it on 760, right, roughly trades, which is a lot. That's not a small number. Some of the trades that he's got are like thousands, some are like 800 or something like that. They're usually pretty much around the 800 mark, which is a pretty huge pool here. So yeah. There it is. We may have bet the 5. So I was kind of thinking that like this move should have a recovery because of RSI, because it hit the bottom on this trend. There's other reasons, you know, that we might see that recovery early today. We're kind of waiting to see what happens. Volume looks kind of so-so compared to the downside. If we were going to have a hook kind of action on AMC, we might expect it to happen, well, really now, or maybe in a little bit up near 505 again. It's the same area that we've been selling off from, so it's probably on purpose that sort of generated the last point of support over here was, you know, a cross section early day to 505. We'll see. We'll see how it goes. Right now, AMC's at 497, so it's had a bit of upside. MPW is doing good this morning. It's at 317. It's at 520. I think it has support up to like, I want to say 574, but we'll see. Like it may be able to push that high. I'm looking at IWM as well. I'm kind of flipping through right now, watching that this morning. So on the 1 hour, it peaked low last week, gapped up, and then it's been pushing okay, you know, above this 1 hour, 180. I don't necessarily expect it to advance. If it comes back up to 208, 209, I don't necessarily expect it to advance just yet with FOMC around the corner. It's not far away at this point. It's a couple weeks away. So we'll see. I mean, it could. You never really know. You know, I'm looking at it like with volume and kind of a setup. I just kind of imagine this is going to be more sideways into FOMC. So maybe up to about 2.8 and then perhaps back down. You never really know though, I guess. That's just my initial thought. That's what I was talking about last week. You know, I've talked about charge point here and there because I still think this is a really good play. It's definitely made an effort to advance, but it's getting pushed down beneath the creek. And here's the thing about charge point is that it's not ever really advanced above a creek for very long. In the last few years, specifically. Anytime it's kind of generated a new creek, it's always kind of had problems. And on the larger time frames, I want to say up to like 4 hour or something like that, it's really evident on the EMAs. It's been trading below them forever. So, it has a lot to prove here. There might be a considerable amount of sellers in this backup. I'm willing to say right now that I don't think it's a lost cause. I'm not going to read too much into the backup here just yet. There are some things that are concerning about it, but on the whole, it just looks to me like a bit of a widening spread coming down. Maybe just a channel down. If you want to draw it like that, you can. And I think that's okay. Like, I think it's possible we get a decent flag motion down to 170 is kind of where we're at right now. We could go lower, frankly, because the bottom here is like 157. And there are levels like 162 that we haven't checked. That's not that far away. So like, if we were to see that kind of drop, it wouldn't be overly surprising. So I don't want to like go too crazy on charge point just yet, assuming that it's the worst, that it's going to have massive downside or something. June 5th, that's coming up, another earnings report. If you're in charge point or you're in any of the EV stocks, they've got good tailwind on their side. Like, they've got support. So there's not a lot of reason that we would expect them to just kind of flat out fail this year. Uncertainty with elections is always a thing, but like, they've gotten a lot of boosts with this administration and policies in this administration over the last few years. They really shouldn't have any problem advancing over the next couple of years. Like, all the analysts I've read on don't really give like a grim outlook for EVs. They've indicated slowdown for obvious reasons, like economic slowdown due to COVID and then also due to inflation. But on the whole, like, infrastructure is building. So that means that these suppliers are going to have business. There's not really any reason to overthink that. Like, it's not, you don't have to think like it's EV versus fossil fuels or something, you know what I mean? Or electronic vehicles or something versus fossil fuels. I mean, I don't know why you would do that to yourself. Like, if you're in the market to make money, just think about industries that are growing, and that's that, or that you expect continued growth. That's just the way I want to think about it. I don't know. Like, I don't personally own an electronic car. I have solar panels, and they help with the electricity bills at my house, but I don't have like a electronic vehicle, And there's things that are good about them, things that are bad about them. We could talk all day about that. But that at the end of the day, it's like, oh, you get instant torque with an electronic vehicle. Cool. But then what happens if you can't find a charging station? Not cool. You know what I mean? And then it's like, there's all kinds of stuff about that you have to be like thinking about. But if you're going to make those arguments, but that doesn't affect the stock price, in my opinion. Like, those are underlying things that are going to be addressed or they won't. But I think on the whole, like, if it's growing, it's growing. So I don't really see the need to question that too much. Anywho, that's the reason why I was even looking at EV stuff. I was like, oh, it's a growing industry. It's in like a fledgling stage. So right now there's a lot of different ones, and none of them are really like taking center point just yet. We'll see what happens, So AMC is sitting at 5. There's a creek that I didn't. So this is kind of weird. Again, it looks like I'm trying to predict bottoms here but this was more of like a pullback region, and we already kind of did it. So I wasn't necessarily expecting us to come back here again, and we did. And it looks like it even set up steeper here on this cross, but I didn't draw that. That was in the after hours action back on Friday. So this particular trend here, do I think this has been met as a creek? Yes. I don't think there's any doubt about that now. 1-2 times, so I'm going to get rid of it. We're pushing up above. It's not entirely unexpected here that we would have that move back to the upside. The first thing I talked about this morning on AMC was the 6-minute chart and how there was a divergence on these two tops, which, you know, may have caused in part the sell-off. I don't think it's a necessarily cause and effect. I think it's just how they relate to one another. There's a correlation there. So that's a thing. But like, I also I didn't feel like that this was likely going to go super low right away, because even during like severe downtrends, the 6-minute still has like strong recovery before the price advances again. So like, I figured this would probably have a decent bounce today. It's coming up pretty high. I wouldn't have necessarily expected it to come beyond 5. So I think that's a good sign. 505 has been the main kill level, sort of like a kill switch for AMC over the last weeks. I mean, it's been a long, I don't want to say that long. It's really not been that long. It feels like a long time, right? When you're going like a mile a minute every day for hours and hours and hours, like I have been. These are kind of exhausting my brain. But it's just a sideways range, and ultimately it's rising. You know, there could be problems in that if it breaks down, because it's like a flag action. We talked about possibility of up thrust causing issues if you can't advance past these certain areas. We've done a pretty good job advancing past what I would call like a liquid center on this, which is sort of like an anchor. You know, we kind of push through it and then coming back up above it, and that's that 485. That was kind of the first one that I wanted to get support over. I think at this point, it's almost not even at play. You can see it's just sort of ignoring it. There really wasn't much of anything here to talk about support or resistance. So at this time, we're going to really look at these top and bottom areas. We're going to look at 505, and we're going to look pretty low, actually. I think we'd have to come down to 446. So maybe a little bit higher, maybe at 450. But 450 and 505, both are kind of your up and down motions for right now. And then we'll see which way it goes. And then GME, we were talking about this, and I was saying, like, at this point, you want to kind of hold here. So you've got the double creek. You have the advancement back above. So in order for this to kind of continue, you know, Bukowski says you probably want to close above 2420. I generally agree with that. It looks like a previous top in the range. But I also think that it could take time. You know, we'll see. These things can sometimes, he calls it a handle. I would just say it's just, again, reaccumulation and or redistribution, or distribution in this case, not redistribution, but one of the two would have to happen before an advancement anyways. So either you're going to reaccumulate or you're going to distribute, and that usually ends up being sideways, you know, for a time. So let me see what the target is here. I keep bouncing back and forth. I know I'm going fast. So GME is at 2346, AMC is at 498. I hopped around a little bit to talk about some other stuff. I have not addressed any big picture stuff on AMC today, except that I gave you guys some ridiculous targets. We'll talk about that maybe later on after we see something. I think I just kind of was expecting Tuesday. I mentioned it last week that I thought Tuesday, maybe into Wednesday this week would be pivotal, especially if we're following the breakout model from January in terms of like timing. Then Tuesday was the day. I know it says here Friday, but it's really Tuesday. I said it like repeatedly last week. I don't know why it looks like Friday here. Maybe because the extended hours are on, shifted it over or something. But this should be the day that we would see an advancement and or capitulation down. Okay. Compute the height from the highest peak to the lowest valley and multiply it by and then add it to the breakout price, highest peak in pattern A. Okay, what's the above percentage? That's a pretty high percentage. So it's a 67% throwback rate. That's pretty high. That's kind of a bummer. That's a high percentage throwback. Not the best performing out of all of them, but it does have a higher percentage meeting target. So that's a decent target is what it's trying to say. So overall, it may not be the highest performance breakout, but like does it actually work out? You know, it's not necessarily the best pattern to trade, but it does have a very high percentage of meeting its target. So 72%. So let's just do it from, I think we're going to do this to here. Yeah, let's do that. And then, yeah, 245, that's an AMC target that I got yesterday. I didn't think it was going to go that high, Booksy. You've been super bearish on it. You said only $80. Yeah, that's only like 3,000%. Actually, I got a target that's really, really, really high. That's like some 24,000% higher than where it was in the lows, but I know why people are getting those targets. And I've been talking about it very like conservatively, but I know why people are getting those high targets. It has a lot to do with the linear chart and those breakout targets that you can get if you assume certain things are happening on that linear chart, like a falling wedge, for example. That target's like 60%, like it's a 618 retrace. So that's like 245, right? But then also there's longer term targets that you can get from other patterns that, yeah, they can be really, really high. So anywho, we'll talk about that later. And actually the targets that I got aren't really like a pattern. They're more of like a cycle target. And I'll have to talk about why I think that it's possible. So we are a little bit at risk here of a head and shoulder. So there was almost a shoulder-like action in pre-market or in after hours on Friday on GME, going up to about, we'll just say 23, I don't know, 2360 or something like that up here. So we're kind of at that level right now at 2325, where you could see this as a potential head and shoulder. We'll do the downward target for that in a minute, but I'm going to do an upward target if we were to close above 2420. So I think it's 655 times 72%, which is pretty high, and that's a 4.72 target. So that's 28, about 28.92. It doesn't have to be perfect. I measured it a little low, and this comes up a little high, so it should average out. It's about up here. We'll just say 28.90. Not a huge target. You know, you might expect a lot of these patterns to have some kind of massive breakout target, but they typically don't. And if we look at this and we were to ask the question, is that a reasonable target, 28.90? Yeah, probably a reasonable target. Looks reasonable to me. In fact, I'm willing to guess that that's gap target. And I'm right about that. So, yep. So you have to think about for a minute, like a lot of people have, I've heard it more than once. So I'm gonna say a lot of people, but I know that more than a few people have said to me that Bulkowski targets are like not valid, like not a good way to trade. And he's taking statistical averages over like 800 trades. And so I'm like kind of like in the method of like, I'm in the opinion that I don't really understand that point of view. Like when people say that kind of stuff to me, I'm like, okay, well, you're basically just against pattern trading because it didn't work for you. Maybe you were in that, you know, that camp or something, or you feel like it's not effective enough because it's not, you're relying too much on probabilities. Well, that's the same as playing like poker. You know, you're relying on probabilities of outcomes based on what you know. And I don't think that that's gambling. I think it's strategic. So it's just the way that you play it. And having confirmations prevents you from playing it the wrong way prematurely, you know, thinking that it's going to definitely finish, but it may not, you know. So you're patient with it. And so this trade is not, it's a close above 24.20. The trade is here. And this is a big trade. This is like a 19% trade. But the trade is not from like the bottom. And I think that's another reason why people don't like the, there's only like a couple Bulkowski trades that are actually from the bottom. And those are usually like in a flag. He'll say something like after the fifth hit or something like that, or after the third hit, you could enter a short position or a long position. So he gives you like early entries, and then he gives you confirmation targets. So anywho, so when looking at this advancement, like, is this completed yet? We would say no, not really. At least with extended hours on, it's not. In regular trading hours, it just have to close above like 2330 area, right? Because that's the high here. It's different. So it depends on how you measure it. So here it's 2340. Yeah. So I probably should have put that down. So these targets are not absurd. They're not like absurdly high. They're usually pretty conservative. But he's not trading, like in this case, he's not trading. You wouldn't be trading in the Bulkowski method. You wouldn't be trading the whole picture. You'd be trading just this bottom because that's all you're measuring. So again, it's like a lot of times people look at that and they think that it's not valid for whatever reason that they may have. But I always have to just ask the question, well, where did that number come from then? If statistically this gives you this breakout target, then answer me, how is it possible? Like, this happens all the time, right? Yeah, I do this like every single day, and every single day it's like the same thing. You'll measure the target, you'll do the percentage meeting, you'll get the price target, and it matches like a previous level perfectly or a previous gap level perfectly. Why is that the case? I think it's because it's mathematical. Like, the things that he's observing 800 plus times are like how these have mathematically set up. The fact that this has like a swing at 50% too, you can see the structure of it. It's there. And then you can see how that advancement price target, if it's consistent, gets you back to a particular level. And then it begs the question, well then, is that the reason we gapped down from this level? Was it just a marker? Or is it, you can start going on and on and on about, is it a bluff? Is that to make you think that it's really important? I don't know, man. At that point, it's like splitting hairs. We could talk about that all day. It's a double bluff. They want you to think it's suspicious, but it's really not suspicious. They don't. No one in the market who's playing on a institutional level. First of all, they don't care what you do, really. They only care as it relates to their bottom line. So if they can use your money, they're going to use your money. But they don't care if you make money on something or lose money on something. That's not their interest to you. They see it as like an aggregate whole, like leading of the masses, right? And then you have the concepts of like pattern breakouts and fake outs. And you can't have fake outs unless you have legitimate pattern breakouts. Like, there's no fake out. If the pattern never works, then retail will never buy into it. So what I like about Bulkowski is that he's taking an assumption that like these patterns exist, and then he's measuring them. And he's not telling you that because he's using statistics, he's not telling you that they're going to work every time. He's giving you targets that you can use, locally, and say like, hey, here's where your confirmation levels are, because if you don't get those, then you're not going to advance, and then it is a fake out, you know what I mean? So I see stuff like this. I see the gap fill target, and I'm like, yeah, okay. So clearly, somehow, like, these are mathematically in sync with one another. You know what I mean? They just are. That's how it's built out. So it's an algorithmic thing. It's controlled, but that's the reason why mathematically it works. If this was just random numbers, there's no way that would mathematically work out. There's no way. I'm convinced that everything would look like a penny stock if institutions didn't trade. You wouldn't have patterns. So anyways, I don't know what I'm addressing here. I guess I'm just addressing like a general doubt of pattern analysis in the market. I just think that's silly. I think you just need to make sure that you understand that it's not, patterns don't work 100% of the time, just like anything, you know. And there's other ways of finding, like you can use EMAs, you can use the MACD, you can use RSI. There's other things that you can use to help give you more information about a trade than just like a pattern without volume. And that's another thing that we could talk about for days is pattern analysis without volume analysis is not good. So anytime you're doing a pattern analysis, you always should have the volume profile as part of your analysis, because if the volume profile doesn't match the pattern, then you're a lot less sure of that pattern. And it typically has a lower statistical probability that it's going to work in your favor, you know. That's just the way that it is. So you just pay attention to those things. Anyways. Good TED Talk, Booksy. Yeah. Thanks. Oh, man. So anywho, that's it. Oh, I got you guys talking about cars. Sorry. Look, I don't have anything. I really like. I already talked about this. I'm really not like a shop talk kind of guy, so I don't really have any strong. A car is a car to me, and I think that you can definitely feel the difference in like a nice, high quality car. That is a Coyote. Hang on just a second. Oh, baby. Probably looking for those kittens. Sorry. I don't really live in like a super rural area. I live in like it's really more than that. It's just like a small town. So we do get animals, but like a coyote just walked by like 15 feet away from my window. He's just cruising down the street now. I think he was looking for, I bet I know what he was looking for. I don't want to make you guys sad, so yeah. I think he was looking for kittens. So we've had these, we got a lot of feral cats in our neighborhood, and we've found multiple. I know it's really sad, but if you're a cat lover, you're probably gonna be sad about it. But we found multiple kittens that just didn't make it lately. And I mean, in all reality, that's just life. Like some kittens are born, they can't see well, they can't find food, and that's that. You know what I mean? Unless somebody takes care of them and goes out of their way to help them. All of our kittens were like that. They all had their eyes kind of sealed. They had really bad goops. Only a couple of them really got what they needed. We had to supplement. But a lot of the kittens in our neighborhood, with the feral cats, we've seen at least 2 or 3 that have died lately. And it's sad. Because you'll see like the mama cat running around with like a dead cat. Super sad in their mouth. Anyways, it's not like light talk. But I'm guessing that usually anytime we see stuff like that, there's like a boom, population boom. We get a lot of the vultures and coyotes around. They're looking for babies. It's kind of disturbing. But I actually think it's probably what it is. This is the last time this happened was like that too. We started getting a lot of vultures and coyotes in the neighborhood. Because I got like a vulture in my backyard. It was trapped. He got injured his wing or something. He was stuck in my fence for like a day and a half before I was able to get him out. he wouldn't leave. He just couldn't fly above like the 6 foot, 7 foot fence. It was kind of sad. I opened a gate, he just wouldn't go to it. And then eventually I just decided to run him out. It was like herding chickens almost. I was like back there with my hands like like a goofball. And I was like, "Go bird, be free." Anyways. I'm a friend of the animals for the most part, but I also have a healthy respect for nature. And sometimes animals need your help, and sometimes they just don't. And the kitten thing, I can't do anything for them. Like, we've got too many cats. If I made $1 million, I'll tell you right now, guys, because my wife and I have talked about it, and I'm not telling you you should root for me to do this, but if we made like $1 million, all of a sudden, we probably would catch and release like as many cats as we could in our neighborhood, because they need to be spayed and neutered. You know, and there's clinics nearby. Like, I know this is like not an animal PSA, but you should always be aware of that. There's usually like clinics that do like cheap rabies stuff and whatever. There's like one clinic that's in a couple towns over that does that. It's literally like for bulk. Like if you want to quickly get a lot of cats, you know, rabies shots, you can like take them all. I don't know how you do that. That'd be hard to do. Get like 10. Like, I'm bringing 10 stray cats for rabies shots today, but they do them for cheap if every now and then. Anyways, yeah, I'm like a cat lady. You guys would laugh if you saw what I wake up to every morning. Be like, what? What's wrong with this guy? I don't even like cats that much. Talked about this too. I'm really not a cat person. The ultimate cat personality is the cat that leaves me alone and that acts more like a dog. And I've got a couple cats that are like that. There's like 2 that are like that. But the rest of them are just like cats. And I don't know, man. We just don't click. I don't hate them. It's not that. It's just, and whoever said, I don't know who said this to me, but whoever said cats are great because they just they just do their own thing. They're not needy. They're complete liars. If a cat thinks that you're its mama, like, it is the neediest thing ever. Like, that is such a fake myth about cats. Like, they are so ridiculously needy, and they will get your attention however they want to get your attention. So I don't know where, I remember people said that to me, like, oh, cats are cool because they just kind of do their own thing. Yeah, I mean, they do take care of themselves in some ways. They clean themselves and they go to the bathroom on their own. But they are not needy. Like, they're very, like, attached creatures. It may just depend on the cat, but yeah, anyways. Like I said, I've got like 2 cats that are like cool, pretty chill. I like them. One of my cats, Otto, is probably my favorite. Because he just comes and sits next to me. He doesn't like demand that I pet him or get in my face. And then I always want to pet him because I'm like, okay, well, you're just sitting real nice. He just wants to be near me. He doesn't necessarily get my lap either. He's not really a lap cat. I kind of like that. My wife's the other way. She really likes the lap cats. So the other 2 always go to her. I'm like, nah, I'd rather not have this hot ball of fur in my lap. Sweat enough as it is. I don't need extra heat. Anyways. Why was I talking about all that stuff? Oh yeah, because that coyote ran by. I got confused because our neighbor's dog, it's not a coyote. I don't know what kind of breed it is. It's really pretty. But from a distance, the body has a very similar size and frame. So it kind of looks like a coyote from a distance. It's darker though, so you can always tell. So at first I did a double take because I thought it was that dog, because that dog literally lives like right behind my house. So I was like, oh, that was what I expected. But then I double take and I was like, no, that's just a random coyote walking through the neighborhood. Again, probably going after kittens or something. All right, so AMC's at 502. It did hit the marker. So if you want me to be self-satisfied, there it is. Good old arrogant Booksy here. Gosh. Oh, man. Hey, if you can't criticize yourself, smug. What a smug individual. I mean, it's not that complicated. It really isn't. I mean, there's people that do. Remember Ivan? He was in the other Discord group. He left. He was really good at this. I really tried to learn more from him. I should have just joined his group and just as a bystander, because he used a method that was based on what he called like an imbalance. I don't remember exactly how he learned it. But it's pretty similar to this idea of sine wave stuff, where like you get an imbalance and there's a way to measure it, and then you can measure like the reactive move and to where like there's a liquidity need. And that's kind of exactly what I do here with like creeks. It's like there's an imbalance, right? Like something's not been checked, and so you end up needing to go back up. So it's an easy enough way to move. I don't want to put words into his mouth though, because his methodology was different, a little different, and I think he got it from somebody else, learned it, and was like sharing it with others. But it's really good. So I don't think this is exclusive to me at all, like this concept here of returning. And I think other people would look at it as, again, a retracement, a throwback, if you will, to come back up and re-examine all this stuff that was passed over really quickly. So back at 505, I think 505 is our number right now. I really think we have to close above 505 if we want to see anything good. So I do say unfortunately a lot, because there are sometimes really steep requirements, right? So right now there's a couple things that are still kind of in my brain, like steep requirements. One is the current trend we're crossing, right? This is an uptrend. So we've lost that uptrend, and now we're returning back to it. And so in theory and in concept, you're basically saying that you had a throwback, because we pretty much went all the way back down to the bottom. And then you're coming all the way back up and you have to recapture an uptrend. I mean, that's kind of a steep ask. Like in most of the time, if I saw something like that, my initial expectation, I know it's within another trend here, but like if I saw a channel, right, and you went up this channel for a few days, and then suddenly you broke down out of this channel and you retrace all the way back to like the beginning of the channel. To me, it's quite a lot to assume that this situation works in your favor, and that you come up and you can somehow break this level, and then continue to the upside. You'd have to basically not only rejoin that trend, but then essentially leave it. So it's kind of like a double resistance break, right? So you'd have to jump the top. And this is why I'm saying unfortunately right now, because it's kind of a lot. It's a lot, It can happen. It's happened on AMC during big moves. But this is a lot to ask, because you're basically saying, oh, I got to go back up above the top. One example of this historically happening was the move right before August. It looked almost exactly like this. Like I drew it like this, right? Like it basically had a full-on throwback to the top chop in that area. It dropped really low. And then even here, when it did get to the top, it actually had a massive reversal too. I think it was right there, where it like came up and then it dropped really low again, and then it went again. And like that was an example of like that reclaimed not only a trend, but then it advanced essentially in like a slingshot method. And it basically did like a 50-50 right around that top here. It's just a lot, So for that kind of an action to take place is quite a big ask. You know, when I think about bullish and bearish moves, I'm like, okay, so not only would it have to get above this trend, but it also have to then get above the top here. And it does look like a little head and shoulder, doesn't it? Yeah, and potentially I would say this guy. I mean, the trend is ugly, but there's like 3 lines there. So it's quite a bit, you know. Yeah, maybe like that. It's hard to define it. Yeah, so previous top being up here around like 520s, you basically we had to look at this whole region as like the need to, let's just say, find support and explore above here. So it's quite a bit. AMC could do it. If we get some momentum here this morning, we might get some good breaks, and if we can hold them, then I don't see why we can't. We should be able to just advance. But you can see how like that's sort of the pocket by which you would need to continue. So being above 505 is a good sign. So we're at 509 right now, approaching 510. See if we get it. 510 is another level. It's like 510, 511 that we've broken off of before. Like there's been a couple times where it's been more like 510, 511. And then going up a little higher, I wouldn't see a lot until about 520. But those would be kind of the 3 upper resistances. So like 505, 510, 520. I know that they're all kind of in the same area, but we've kind of picked different ones at different times to sell from. So those are pretty critical at this point. So we'd have to see it kind of advance here. And then there's a bigger trend. You know, I talked about this a little bit, that the cross trend here would suggest that you would come all the way up and meet that guy. Now, the way I drew it, it sort of already got there and it didn't quite reach. So I'm not sure that at this point we would even keep using it. That's this guy coming up from the bottom here. But, yeah, you could argue, someone could argue this is like a head and shoulder as well, because like there's a head action in the middle and 2 outward shoulder actions that look kind of symmetrical. But if it's a head and shoulder, it's a weird one. You can see what I'm talking about here, like head, maybe not, I don't know. This would be like your shoulder right up to like 505. Head goes up a little higher, and then shoulder number 2 does push higher, but it's like ascending. I don't think that's the best way to look at this, so I'm not going to do that, but I'm just kind of eyeballing the RSI now. I'm like, oh, well, maybe. You can see the chop down and the chop back up. So maybe. But then in this case, the shoulder didn't break down. It was more like a bottoming action. So it would be like coming back up to the top, which is sort of what happened here, and then dipping and then ripping back up to the top. Anyways, stop talking like that and just do this. Just do the chart, man. All right. This looks like 10 degrees. I wonder why I have this one at 11. I don't know. I think I was probably favoring this touch instead of this one. I'll use that instead. And then on this, I think I used the cross trend here, but what I could do is just kind of eyeball the breakdown. It looks like right there. And that would give me a sense of like potential target here. So like another, don't think about it like I'm changing it. Think about it like we're just assuming like a different center pivot. So like if you were to draw a fib fan from like the bottom way over here at like 430, you would have multiple fans, right? You'd have multiple lines going outward, trajectories. I picked the one that I thought was right, which I think I did, what I did is like a 50% here on that move. So I picked a little higher one, but you know, there's other ones there. So like this one, this trajectory is probably fine. I actually like that one better for what you see in the middle. You can see it grabbed it and rode it up, and then it broke down right there. So that would indicate that, maybe here we see that cross section. It's pretty darn close. I mean, it's pretty close to like the same. I don't know. I don't really like it that much, actually. Take it back. Maybe. All right. So this would say that like you get up to 545 basically today. It's like right in that middle point, which was the breakout target that we had from last week. It's not really a breakout though at this point. You guys are like, what? Oh man, I know. This is what I'm saying. It's like there's a lot here that has to happen. That's why I'm saying it's not really like an easy move to confirm, because yeah, being above 505 is good. Being above 510 is good. Being above 525 would be even better at this point. At that point, you're kind of just waiting. Maybe the ship's already left, but I think that those levels are logical places to consider, like we need to have support. But I think what we're probably going to see if we were to continue advancing here is we probably see this come up to 545, and it would have to then go like sideways here again, maybe like a pullback, and then advance above 545, and you'd finally have a little bit more of a move to the upside. Man, and then those silly angles that we drew, we're kind of pinching into these points here. We're kind of meeting those points way later. We were hoping to get them early, like way over here, and move up to 6. And we didn't do that. So we're actually approaching them really late, and they're pretty low now. And it's okay if you don't know what I'm talking about. It's all right. It's that we didn't drive the price up earlier. So these parallels that we talked about as we compared them to January, and I did a comparison last week, these parallels kind of help define the structure. And because we're crossing them like sideways, we're not seeing the advancement to those parallels in a vertical way. We're seeing it in a horizontal way. So unfortunately, yeah, we're kind of approaching them sideways. So right now it kind of looks like, I mean, I guess you could see it go above like that. But basically what I'm saying is between 545 and 575, that's where you would have to see a jump and retracement. If we were just go as the crow flies straight up here. Yeah. That would put us above that parallel, and then we'd have, once again, it's kind of like, who knows, this could go sideways again. But I think at that point, we'd have reason to think that we would probably advance maybe even into Friday this week, up to like 8, if it can hold. None of that's really confirmed yet. I'm just talking. We're almost there. We're at 520, so we've made good strides already today. Yeah, it's weird. Like, when I started the morning, I did get up a little bit late, but I was just kind of walking around. I was doing stuff. My son has like a award ceremony, for kids or whatever. And I won't be able to go today, but like he was, my wife had taken off to go, and it's not a big deal. He's a little kid. He's probably not going to get much of anything. Maybe he'll get like a banner, a ribbon for something. He's probably going to get something for math. I think I'm not going to say he was top in his class. I don't know that for sure. I know he was top in his class, like his classroom. His teacher made him sound like he was some kind of, I don't really get it though, You brag about your own kids, I get that, but it's not like he's not doing like calculus or something. But anyways, he might get something for that. That's this afternoon. So I was like getting ready for all that. And then the market was sliding, and People were like, oh, Booksy's sleeping, you know, he's not. And I know they were just messing with me because they're like, where is he? He's not talking about it on the Discord. But I was watching the downside and I was just like, well, I mean, it hasn't broken through the low and it's still in the trend. So I'm kind of shrugging my shoulders right now. I'm like, I don't know. There really wasn't much to say. And even now I'm like, I don't know. You know, until I see like the right moves here to get out of this flipping range that we've been in for weeks now. Maybe it's not been that long. It feels like forever, doesn't it? It really hasn't been that long. It feels like an eternity. It's only been like 5 days, 5 trading days. But after a long weekend, it feels, I guess, it's just time has been longer. Yeah, we just need to see that support. We just haven't gotten it yet. Every time we come up, we don't build support. We just nosedive. So it's been pretty much the same every single time we've come through here. And so I wasn't happy to see the drop, but I kind of was like shrugging my shoulders this morning, like whatever. We're probably going to come back up and then we'll find out what happens. So I'm happy to see that GME is definitely breaking out. It's moving up high. You know, I had this diamond target. We'll see what happens. Maybe that matters. Maybe it doesn't. 6 minutes way overbought. So we'll see. Maybe the diamond target matters at this point, but I kind of doubt it. It's not that significant. I think the other target that we talked about, closing above 24.20, we're not there yet. We haven't closed. We're only a couple hours into the day. But if we, for some reason, got this target early, then whatever, it's done. You know what I mean? You don't have to worry about it. Sometimes you get the confirmation real nice. Sometimes you don't. Sometimes it just goes, and that's that. Once it breached these levels, if it finds momentum, it finds momentum. My expectation would probably still be that at some point we see another pullback, reaccumulation, and push. This is a gap zone, so it's a gap twice. So it could be that we don't, there's two possibilities with gaps, right? So like one is that there's an intentional skip of a liquidity level and there's not a desire to really go back through it and ever explore it. And that happens. So AMC and all the kinds of stocks will have their share of those levels where they just get bought through or sold through. A lot of times when the gaps are left, I typically think about it like that's where we could set up a potential liquidity exploration. So you think about it like, a exploration for shares, and like, hell, if you haven't really explored shares in a region, then it's likely that you're going to sit there and explore shares. But I'll tell you right now, it's it's debatable. I think you could easily say to me that that's not the case in a lot of situations. I find that to be usually pretty reliable. So if you jump over a bunch of liquidity levels, you'll have like shelves. So you can see here, like there's a high amount of trading in sideways action areas. So our next shelf is up here at like 30, right? Which is right where our target is for that breakout. Right underneath it, you know, is where we might get stuck. But you could see how that would make sense if, like, for example, we filled this gap and then ended up chopping here. You know, you would be like, oh yeah, well, we're just going back down through this liquidity. So I always think about that when I'm looking at these levels. And then probably a good idea to go back historically and just check it out. So I'm going to go back and look. Because again, there's usually some significance on the big picture if they've gapped around a level for some reason. And yeah, you can kind of see that this area was actually, look at how like long we traded along it, but then there's still like not that much liquidity. So I think this is just a low liquidity area because there's no reason with that much sideways action. So on the big picture, this is really the only spot right here. And I would say we've traded along it a lot, but you can see we've gone kind of around it almost all the time. But this area looks like you would have done enough there that you wouldn't need to. So Anywho, so big picture, you can see that like this was already pretty heavily traded right below in previous times. So maybe that's why we just skip it. And then going up above, I'd say this is a little lower. So I would look at the area from that 28.90 down to maybe kind of where we are right now, like 26.10. It could be a problem area because we've not found great liquidity there, and that's where the gap kind of started. So in the past, I'm not seeing much trading at all. Let's go back further. No, even like coming up, this is where it first found its footing after the big flushes. Maybe like 50% here because it found bottom at like 10 and then it ran up to right where we are. Found a footing here and then it kind of went sideways from there, right? So on GME, this is historically a pretty, I don't know, I would say almost not unimportant, it's important. But I could see why maybe we gap through it. The desire to kind of jump that level and come below. Because I would think like sitting on top of it would indicate support. So it's a pretty important level here. Glad I went back and looked at it. And 2-hour RSI, still technically in the midst of kind of like a downtrend here. So there's that. But it did seem to find a bit of a bottom, you know, locally. So I'm not super concerned with that movement. It could be anything. You could come back up, you know. Could go down. I mean, it's right in the middle, so there's not really anything to say about it. Anyways, that big picture look, though, helps me because now I can see why this area, and we just so happened to stop right on it, but this area was, so let me, how do I define this better so I'm not talking. So you really want to find support above here. Like this is a historic, this has historically been an important support. Historis. Historis. So yeah, that makes sense. And it helps me to understand the gap better. Like, oh, that's why we just kind of gap through all this. It's easy, probably was easier to do that in extended hours, a lot less volume. Yeah, so there you go. You've got to push up. I would say that these targets have been met. So the double flush target is done. I don't think we need to keep it on the screen, if not just to demonstrate that it works. That's probably the only reason we might keep it, but I'll keep it over here since it didn't happen like really fast. It was kind of like a slow moving 3-day thing. I don't want to block the whole screen out. We did find support in this pocket, so that's good. There's nothing really saying you can't come back down here. So just so you know, like if this is an SOS, the backup would probably be pretty low, like down to 22.5. Like there's a lot of supports here that we didn't check on the way out. One is right around 22.3. The other one's like 22.80. Those are places you could see a pullback. Let's go back and look at this trend. AMC is at 526, so it also made a push up pretty high. Went to 537. Didn't quite reach that 545 target, but it's an advancement, you know, so a higher high there. 6 minutes way oversold, so again, I think there's going to be a need to kind of come back. You can see it reached kind of our 50% line here. We were drawing out this channel, and I kind of expected it would have to advance, find support, advance, find support. So I'm not super concerned of a pullback here at all. I'd be more concerned if it just slid back down through 505 again. I think that would be not great, but there's space to work it out. So it's looking like a pretty green day for GME fans. 34% up. Looks like it's got above the 2 markers it needs to get above. We just need to see it close above there. This long-term uptrend, typically this is really important for the stock. So we previously saw it hit there, and that's where we started the downward motion. Now we're above it. So I think if we closed above that, that would be even stronger. I'm not convinced we will. This could end up acting a lot like what you would see in a... but there's really good news from this, so hold on a second. This is a lot like what you would see in like a sine wave workout. So like, for example, going backwards in time, you can kind of see how this is like a widening. And anytime it's like rejected off of it, it's kind of pushed away from it. But I wouldn't be surprised if this kind of came and like used it as a sine wave support. That makes sense. Before seeing any kind of like other advancement. The good news I was about to say is that the head and shoulder breakdown here, in my opinion, I think it failed. So we had an early head and shoulder that did not fail. That would be like this guy up here. And it had a really low target. And that's this kind of advancement, support, and then failure to advance above sort of that shoulder angle, angled shoulder, if you will. These are not quite the same as, ooh, mouse, what are you doing? These are not quite the same as like a perfect, you know, head and shoulder where you have horizontals, but it's still useful. So when looking backwards, well, it could still be finishing out a symmetrical look, I guess. As you can see, that dip here kind of matches. And I would just say it didn't look like a breakdown. I guess that's what I was trying to get at. Really should have just left it at that. So you can see like it did come low. It looked like it was breaking down out of that head and shoulder structure. If you're using the same parallels. And then, yeah. And I'm sure you could draw these steeper, by the way. Some of you are looking at it like, well, why didn't you draw it like that? You know, because then you would have this be like here. Yeah, I mean, either way, it's fine. The reason I did that is because of the early advancement. And then you can see the trends on the peaks match this steeper trend, not the lower trend. But either one's fine. So from a structural standpoint, this looks better on the bottoms. I used it because I was using the cross, and I wanted to see the waveform if it broke here, and it did. So that's the reason I used a steep one. Either one's fine. It's different. So, like, I was expecting it to kind of come through here is what I was trying to say. And I would expect it to possibly go through it again. If you were to use the lower ones, I don't think you would want to see them break down. So it's like 15 degrees here on this chart. It doesn't match the tops, but whatever. Maybe where the gap was, like here. I don't know. It doesn't really match at all, but I'm sure if you did this in with extended hours, it would look different. Well, whatever. This could give you an indication of possible places that you might find resistance as well. I'm willing to bet that no matter which way you do it, you're probably going to be able to find fibs. I think everything kind of interlocks in that way. Yeah, this is fine. You can do it like that. I should have just copied and pasted them again. Whatever. Yeah, so the expectation may be that this is where you hit a resistance, but it's the same as the horizontal. So at this point, I'm just kind of like, it's why, you know, it doesn't matter. It's the same thing. Still this top area right here. Just another way of looking at it, I guess. I was trying to illustrate something and didn't really ever get around to it. What about the gap below? That's a good question. is it possible that you come back down after, I'm thinking out loud, is it possible that you come back down after this to get to the gap below? And could it still be an advancement after that? Yes. So there is a really low trend here, and I mentioned it earlier that I don't think it's what we want to see happen necessarily, you know? But imagine you came to the end of the schematic and you flushed down and then you flushed back up. You know what I mean? And I'm talking about this in reverse. So like here, if this had come all the way to the bottom and then only back up, it would have been really similar to what we see over here in that regard. And it obviously didn't happen that way, but would it have been okay if it had? And the answer I think is yes, because looking back here, you can see like there is an advancement over a creek, but it's pretty weak. You know, it's a really small touch. So I think a throwback to this previous top to hit support here would not have been considered like a breakdown. You know, we would have just looked at it like, oh, okay, it was just like a really massive up thrust that then flushed back to support and then advanced again. So why am I saying that? Because in reverse, the same applies. I think you have a similar situation where you could see a potential throwback. Although in this case, I guess the problem being that you're relying on a creek, not a horizontal, to tell you the story. But I think you get the point. Like this motion here, if it were to reject, let's say it rejected at 27, and then it came all the way back down to fill the gap at 19, maybe going into Friday or something. Would that break the schematic? The answer is no, because even though that's a deep pullback, it looks distributive. I still don't think it necessarily breaks it by nature of where that creek was set up, which is set up really steep, and we just jumped it on a gap. So it was like intentionally left open. So I think there's a possibility, although I don't want it to happen, I think there's a possibility that you come back down for liquidity and get the gap fill, and it would still potentially be bullish. Now in that particular situation, changes the way I would draw out the head and shoulder, of course. But yeah, I mean, sure. I'm just thinking out loud. Watching it, I'm not saying it's dependent on the head and shoulder. I'm just saying, like, if you go back retroactively and you look at the symmetry of it or the lack of symmetry, there might be answers there that can help you. And I think for me, that's the answer that I'm looking for, is like, could this have pulled all the way back down and still been supporting? Yeah, I think it would have been fine. It didn't do that. Thankfully, it made it easier on us. That was when we were back up here and I was talking about coming back to, I think that was after that, right? I bought in after it kind of went above. I bought in on this move. I had a very smart money like buy-in on this. Like I bought in right before it moved up. But mostly because I was just waiting, because I didn't think this was necessarily going to hold high. Like I talked about it coming back down to 14 again. So I thought it was going to maybe come back down again. Mostly because I didn't think it had gotten enough support. That didn't happen. So anywho, the reason I'm bringing that up is because now that we're working it out, you can see like this is a different thing, right? It's a different advancement. I'm just asking the question, could it come down and gap fill and still be bullish? I think so. I think it'd be a very difficult road though. Very tightrope-like, you know. So, yeah. It'd be a throwback, basically. And sort of like a test. I mean, so a backup is where you have an SOS and then it comes all the way back to the creek. But typically, like, I wouldn't see this as a backup. I'd see it more as a throwback, as a support, because really it's like a retest. If this is a spring, it's almost like all the way back down to retest the floor, like as if because it didn't get tested, you know. It just kind of bled right through that floor on the gap. So I don't know. It's a tough one. And certainly would look really bad if it just started dropping back down. But you know how it is. What would be stronger would be to form like an accumulative range up here above 2420. We could work our way sideways for a day for all I care. Could it be faster? Yeah, could it be faster? Of course. You know, you could just see it advance like that really quickly. But any time spent here isn't necessarily bad. You just have to watch any kind of a range form out. This is the main criteria that I have for today. So with or without me present, you guys should know that I'm looking at 2340 up to where we are now, up here around 2650s, 2660s rather, as that's the region that I want to kind of explore and find support in. Ideally, that would be best. And then advance higher to above the historic support at 2890, although the target for this bottom, if you do it as an Eve and Adam bottom, is 2890. It's not higher, so you then have to rely on just sort of forward-thinking action. You can't look at the past targets. They don't really give you any indication you go any higher. But yeah, I would say that this double flush target ended up being really, really good. That would have been a really killer trade. You know, it's funny too, in a not funny way, but I was thinking about it when it got down bottom here, how I was like, man, if this turns around, it's going to probably rock, you know, it's probably gonna be really good. And I was thinking to myself, I should probably get into, I had stopped streaming at that point. I was like, I should get into, it's a 50% move. I was like thinking I should get into calls or something, but I haven't bought calls on GME in a while. So I didn't really know what the options chain looked like. And I was like, yeah, I'm not really feeling it. I had, didn't have a desire to watch it all day. I ended up not really seeing much of the action until after market closed. I was already done. I came back and looked at it. So I never got into the call position, but it crossed my mind. I was like, well, if it moves, it's probably going to be pretty fast. Another way to look at this would have been just kind of a rising wedge or a rising widening. So I know there's folks out there that are probably like wondering why I haven't talked about that. It's not that I haven't talked about it. It just hasn't really been on the forefront of my mind. When it came low, I remember thinking, I was like, if it doesn't drop here, it's probably going to rock, because when it came low, it didn't make it to the bottom. So anytime you have like a widening and it fails to advance all the way from like one side to the other, depends on the setup, of course, but if you see a failure to advance, usually it means you're going to reverse pretty hard. The same goes for channels as well. If the channel fails to kind of reach a top or a bottom, and it's clear that the volume isn't going to follow through, then it usually means you're going to head the other direction. So in this case, this widening really branches out quite far. Yeah, that would give a little bit of credence, or that would give a little bit of credibility to the possibility of this working long term as a kind of larger iteration of what we just saw over here. Like this pulls all the way back down and then it comes back up. Yeah, maybe. I could see that. Tries to sell down low again for earnings. Yeah, and then it gets to that low. That'd be crazy. That happened. So last week, I think it was Reese mentioned that on the hourly, the gap was filled, but I don't think it was ever filled on the, like when you go down to like the minute chart and you look at the closing price, we didn't get there. By the way, I don't want this to happen. I'm just like thinking about it. Because now I'm looking at this pattern and I'm like, well, this does happen quite a bit, where you start off with a smaller version of a very larger pattern. Oof, So what you're saying, Booksy, is we're going nowhere, and I'm saying that if you made if you played this 50% run up on calls, I can't tell you what to do, but if it were me, I'd already be out of the position for now, because I don't think there's going to be much more upside anyways, and without some kind of reaccumulation happening, which is going to probably destroy those options contracts. That's my thought. I'm wrong sometimes, so take it for what it is. There's going to be plenty of people out there that say, no, we're going to, 40. I already gave you targets last couple weeks that I've been talking about. I mean, I'm still really bullish on it. I still think we're probably going to head back up, potentially really high here. But this kind of schematic draws my attention because it's it just reminds me of like a really simple way of accumulating through a range and creating like a larger waveform. So we were just talking about how this was like a weak accumulation area. Like there really wasn't a lot done here in the past, historically. And it would be a good place to kind of camp. And if it doesn't camp below it, I would still maybe expect it to sort of camp above it going into earnings. So even if it didn't kind of camp below, I think it's possible we could see something like that, like above, if it did go to that other gap, a really similar situation, and just kind of come back to this area. Either one. I feel like either one's pretty good. Yeah. We'll see. We'll see. I'm just thinking about this. So if we were to do something similar, and I'm making an assumption here that let's pretend like that's as high as it goes. So we got the double flush, right? And then it does the same thing, but on a much larger scale. And it doesn't ever really get much higher than 2670, or maybe it does go up to 2890. We'll see. We could have to change it. I could see this as like a potential for, this could get you back down to that, I'm just guessing it's at center liquidity, so I think that's probably where it would end up. This could get you back down by earnings to the $14 mark, which is the giant creek. Oh yeah. So the optimist to me doesn't want that to happen, because I'd rather it just continue back up. And for a reaccumulation, you want it to kind of recover quickly and then go high. But I think it does beg the question, this is probably done in extended hours, that's why it's not matching perfectly, because I don't usually get that way off like that. But I think it's probably like an extended hours thing. I think it begs the question, like, is that really like a bad thing to have that pull all the way back down to 15 or lower? No, it's not, because if this is an advancement after a breakout, if it can get that recovery and it holds that creek, even if this chops down, I mean, shoot, this could chop down to like 12 again, this previous floor. Even if it chopped down that low, you're outside the major trend you've been in for years. So it's not a bad thing. It'd just be a different way of going about. It'd be like almost like a spring before another move. We were talking about that with AMC too. So we were talking about, well, what if it threw back all the way to 3? It's not necessarily bad at that point. It's bad if it starts breaking down creeks, but that's not what I'm seeing here as possibility for GME. So for example, if that wick is the highest point that it goes, can't really assume anything with the market, but we could see how this gap fill could result in a pretty massive bounce back up to the top. Be some nice swings here if that were the case. Anyways, this is where the breakdown would be. So you'd roughly go back down by earnings. I think it would be pretty bad, this particular move. It'd have to look like a full-on breakdown. It's hard to know which one to grab, too. Something like that. What's this angle here? Oh, it's a curve. It's not an angle. That's right. Drew it like a curve. 24 degrees. Yeah, similar. Yeah, it's just a thought. I think anything above there, you're probably going to head up to near 40. I think if we can get above this $30, it's like 28.90. I think get above that 28.90 mark, hold support, you're probably going to head up to 40. That's pretty straightforward. But below it, not quite so simple. I think it could form a very large diamond-like structure. It's crazy talk, Booksy. It's never going to happen. Here we go again. He's talking about downside. Yeah, you call me crazy all you want, but this pattern worked on SPY. It kept appearing. Remember, it appeared like 15 times or something. So I did measurements from it to the upside, and I said, here's how it could get back up high. My timing wasn't way off, but it was pretty early, I guess, for most people's liking. It just assumed like a lower trajectory. It didn't take the speedy one, but it got there, as you would expect. Now, there's not like a reason to say that you couldn't have done it another way. I guess you could have. Plenty of people thought it was going to come back to all-time highs again, but not a lot of people were thinking about that stuff way back in like October, when I was like looking at how it could bottom as a giant diamond. When you see those patterns appear, it's definitely never out of the realm of possibility that that's the way the stock is being traded right now. There might be a larger pattern like that building out. And my guess is, without even looking at it really closely, my guess is this area on the left, this really tiny area, probably looks a lot like the bigger picture there. So we can go and take a look. Yeah. So my thought is that probably this setup right here looks a lot like this setup right here. And so it's like an iterative workout where you're seeing it kind of expand a model of trading potentially. So I'm just kind of playing through that in my head what that model might look like. And yeah, the center liquidity has been pretty much the same throughout, so I don't think that would change. What would happen is you would trade, so you're widening and then you're narrowing. You'd trade into that center liquidity at 21 if it continued a diamond pattern. You could get the gap fill first, but then you go into a narrowing at 21. Everyone would say it looks like a big pennant, but then if it dropped down, you've got a really low target because it would break all the way down to, I think by earnings, it would be back down to like 1440. But then the good news is if the pattern did much the same and you did get a larger flush, now you might be saying at this point, well, how long does that pattern just keep going? It doesn't just keep going indefinitely. No, it doesn't. And that's why you look at like support, because like, so what this pattern happened once, it doesn't have to happen again on the bigger picture. No, it doesn't. Just because you see a possibility, it doesn't mean it's going to happen. Absolutely. At some point, it's not going to happen, right? So if that's the way it's being traded, it will until it won't. Okay, so there's still this idea in my mind that like if we can make a, let's call it an SOS kind of region above 2340, I don't think that we're just going to necessarily do this. But it is important to note that if you form a distribution here above 2340, there's nothing preventing this from doing like a little cattier section right here, going sideways for a day, making everybody think it's going to go higher, and then it doesn't because it distributes. So you still have to be really careful no matter what happens. You know, I said it's either going to distribute or be a reaccumulation. That's still the bottom line, period. That's always the same, no matter what happens. When you advance past a range, you got to then watch and see what happens. So I'm saying in the distribution route, this goes sideways for a day or so, and then it drops, goes to fill the gap, recovers, comes back up, hits a lower high around 25. I think it'll be parallel because these are setting up like parallels. So I'm assuming that it's probably going to be parallel, and then it spikes one more time, and then it drops into earnings. That's how you get the fill of the gap finally, and then of course the end all be all for that would be the pullback to the macro creek. And there you have essentially like a full throwback, because this is right where back where we started. So this ends up being around 1430, and that's right where this thing kind of took off from. And again, that might seem like a really bad thing because you're like, well, then that's a big waste of all this effort, right? Like it just has erased the full, it's a full retracement. That's not the case. So as I'm talking about this, we're going into lunchtime, and typically your price action kind of flattens out during lunch. But I also always make note that whenever I start talking about bearish stuff, people tend to dip off the stream pretty quick because they don't like the thought of this going down. But a responsible trader, a professional trader, is going to consider these kinds of possibilities. So I'm not trying to puff myself up by talking about it, but I'm saying that if you haven't even considered the possibility that this retraces back down to 1430 and you're a GME person, like, I'm telling you, it's technically possible and very viable that happens. So you don't have to take my word for it. You can go investigate on your own, but just be aware that's where that's coming from. And I think that on the big picture, this does look a lot to me like a working out of a giant cat ear schematic. So when we go back and you look at this, I just did a diamond, right? That's all I did. But if you go back and you look at the big picture, there's definitely an appearance here of, a potential cat ear. This has happened to us more than once. August is one of those examples I bring up a lot on AMC. It was very similar where I had a move, and then we talked about this bottom. And by the way, this is that same bottom we've been talking about. So I know that this has been a really obnoxious thing for people. But if you need me to prove any kind of credibility to you about this kind of a bottom, this should be some of that credibility. We've been talking about this a lot. And I said that this is kind of where I expected it to be. When we had an early move up and then it pulled back, I said at that point, and I tried to map it out, but I couldn't quite get it all of it because I didn't have all the details. I mentioned something like this happening where you could basically enter into like that master fractal mode where you basically have like a push up and then you form like a giant cat ear later on. And I didn't know where it would be exactly, and I was trying to like map it out. You can go back like a week. There was like a moment somewhere over here on like maybe around the week of the, whatever this was, the 13th, late in that week, we were talking about the working out here. Yeah, I understand that. I'm looking at what Rolando here says, so no, I understand that. Yeah, most people aren't going to be considering selling anyways, so they don't really care. But if you're playing options contracts, I think you probably do really care that the possibilities are here. So if this works out as a like kind of a smaller distributive effort, this would be the end. This would be the end. So this would be ear 1, 2 here. That's how you would see it. So you'd see it as a big push up and then ear 1, ear 2, very low, obviously. If you're looking at this as if this is just the working out of that ear, then I probably would not expect it to be this low. And a lot of it will depend on kind of what we did on AMC. We did those sideways actions here. And the reason we did that was because it relates back to January. When we had the January push up, those cat ears, as we saw them, that reaccumulation that happened on those parallels. And we did a diagram of it last week where there was the push up, you had the reaccumulation happen, and basically you formed out like a little mini ear, and then it sort of popped up and it just took off, right? Like that's kind of the way that it went about. It was really more like this, because I would say the last year was really these two pushes up. But the point is that advancement formed out on some parallels, and we found what those parallels were and how they were set up. And I've got them drawn already on my screen, and I left them there. So I left those parallels up, even though, you know, it can be kind of muddy to do so. That's these guys. So I'm not thinking it's very different for GME at this point. Like I'm thinking that if we were to see an advancement, it's possible that we've already seen one of the ears, sure, and it's just really low. But my expectation would be that more likely, zoom out a bit, is that you would form out those ears along these parallels, because that's what happened in that January build out, right? Where you'd see some kind of an ear formation or whatever over here. That's sort of similar to what we were expecting. I'm not going to go back and do that comparison again. I actually hit it all on my larger chart recently because I didn't want to look at it anymore, but that's roughly what we did. And the expectation was that you would potentially advance here and then keep advancing up. And from that point, it just kind of depends on what you think about the setup and whether you think it's going to continue to advance higher or whatever. Basically, it went up to about that parallel, and then it started moving across. And so the expectation would be that you really wouldn't find a deciding moment until June. For AMC, that's a bit of a difficult one because a low spring, if we were to wait that long, a low spring could be a really deep dive. I mean, it depends on how this sets up. We're not there yet. Frankly, we could be setting up right now and not really be hyper aware of it. Like we could be setting up for this kind of a move here, much like GME, you know, and thinking that this is going to be good, and it's really like a head fake, and then it reverses, it breaks the ice, and then it breaks the ice again, and you end up with a breakdown, you know. I think this is a very legitimate concern. Probably be like there. Yeah. It's similar, you know, and then you could see that return back to 3, and it might feel like the world is ending, but this is just a really long-term distributive effort. And we don't see that top till way later, you know. At that point, sure, like a number of things could happen. So if it's more like, hey, just give me like the bare bones, what do you think is the bearish and bullish outlook? There's pretty much the exact same schematic. Well, one of them happens high, and it doesn't really ever advance low again. It would be like us kind of immediately like moving into sort of SOS mode and continuing upward, something like this. Whereas this one would need to come all the way back down. Doesn't leave behind the check. It goes for the check. Yeah, I mean, I could see either one. This is why people don't like listening to me. I can hear it in my own voice. It's like, here's the party pooper moment. It's just a question of like levels at that point. I mean, if you're really doing your best to kind of understand the movement of the stock, then it just boils down to like, where are we holding support? Where are we not? If we hold support here, and I don't feel like there's a reason to just immediately doubt and say, oh, we're gonna drop no matter. No, I mean, if you hold support, you hold support, and then you wait till the next level, so on and so forth. Like, it's not that complicated, you know. But if in the long run, if you have an idea of possibility, then you're like, okay, well, if we don't hold support, this could work out a pretty long-winded distribution. It could be a lot more violent than I've drawn it, but you get the point. And on the big picture, I haven't really talked about this yet, but on the big picture, I'm thinking October 7th is really like the bottom. I know the way I drew it out makes it look like it's a top, but I think October 7th, where it makes it look like it's not the bottom, it makes it look like it's kind of a part way thing. And I haven't shown you guys since earlier today, but if in wave form speak, like that would be your bottom of the wave. And as we know, like, waveforms don't always bottom at the bottom, if that makes sense, because the market's not a perfect wave. So sometimes it gets there early and hits the low early. Sometimes it hits the low after the perceived wave bottom. So when I'm talking about, and this is kind of a trust me bro moment right now anyways, but what I'm talking about is right here. This October 7th area is a low wave. It should be a low period, and then you should see it turn. But technically, like, this could have been the bottom, this 230, and this could be advancing by the time we get to October. And there's a number of reasons why I think that's a possibility. But there's also nothing to say like this can't see a retracement back down first, you know, to that $3 level, and then, you know, start all over again, basically. And you can see how on RSI, even like just simple things like this. I'm on the weekly, by the way, that this could very easily just be like an up thrust that still needs to come back. It probably makes a higher low here, right? But the price action could come lower, you know, and then you'd have an even greater divergence to propel you upward, you know. And I think those are reasonable possibilities. And it would make it very difficult for people that are assuming it's going to look like this way up here, you know. It'd make it really difficult for folks to kind of track it. Anyways, there's a lot of reasons this chart might be really significant, but I'm not quite ready to show it off just yet. So I hate to tease that kind of crap, but I'm not trying to tease you. I just don't think it's responsible to really kind of like walk through it just yet. Is that it requires patience from the viewership. And we don't feel very patient on a Tuesday after a long weekend. If the price kind of chills out here for a little bit around noon, I might step back over. I told you guys earlier, I might step back and try to walk through that. A lot of it has to do with this chart and something that I found. I hate saying like discovered, because it makes it sound like no one else could have found it before, but it's not like, it's not that's not exactly what I mean. It's just more like information, I guess, that I didn't have before. So anyways, so if this is bullish, we may see it again chop here, form a reaccumulation over the next day or so, maybe faster, could be significantly faster than that. And you might see it then advance back above 28.90. I think, you know, there's not much else to say other than, like, if you reject here, we're kind of just running along these parallels, and that's what I was trying to get at earlier, is that at least at this point, there's not really any reason to suspect that we couldn't chop all the way back down even to the gap fill. So this significant move is very significant. And if you've managed to play it and you've had good money on the options, for example, there's no reason to, in my opinion, not have consideration of downside. I don't want to say like it's definitely going down, but to not even consider it would be, I think, a folly, personally. That's kind of where I'm at with that. Yeah. So. So looking at where we're at on AMC, I'm going to check out EMAs for a minute. I haven't really looked at it. We're at 511. It reminds me a little bit of that pullback we had here. Remember when we came back down after advancing above, and we came back down and we tapped 483, and then we kind of chopped up for a day or so. This is similar, but notice that the RSI is much lower on this higher push, and arguably there's a divergence there, but in some ways it's setting up much the same. Like, you've got this kind of initial push. So on the follow through, what you don't want is what happened to us back on Thursday, which is that chop here to result in a distributive action. It's similar to what we were talking about GME here. Like, you might have a distributive action on this top, so it might look really bullish at first, and then ultimately, if it does have a distributive action, you're going to head back down to probably really low, right? And for AMC, this is not a good place to have that happen, because I don't think at this point that distributive top lends itself to much positive news. The setups are pretty different in that regard. I don't really see the same kind of working out. It really would be, if it breaks down here, it would end up just being a flag breakdown. We'd probably end up back down towards the bottom, previous bottom here at like 420. I don't know. I'd have to look through the, yeah, I mean, all this kind of adds up though. It's sensible. Sure. It's kind of a slow burn back down through. I'm being pretty generous too about that, because I think it could be much faster. Much, much faster. Anyways, those are, none of this has happened yet, but it's just a matter of whether or not we distribute from this region. So you really want to find support here above 512. And I was thinking about how this was very misleading. This support above 484 made it seem like, oh, you're going to have strength. And we did have some serious volume, but it was, again, volume into a top that then dropped again. And so similarly, you might expect something like that as a possibility here, back up to like 520. So yeah, we'll see. We will see. So on the 15-minute, there's a little bit of a divergence on that top, those two tops. So you don't want it to peak out the same way, because that would be detrimental, I think. It's unlikely that the widening gets any wider, though. I think it's kind of gone at this point. It's not going to come back down and reach that low again. Not on RSI, not there. 30-minute it could. I think 30 minutes got a lot more potential for this to kind of work its way down back to lows, kind of like where we were right before we took off back in May. You can see this almost head and shoulder like structure too. I'm talking about that quite a bit that downward motion here just to kind of thrash about and get it low. That'd be an easy way to kind of reset it. I don't know. Until it leaves this channel over like 460s or whatever, I just think it still looks like a flag. I'm just not seeing like anything here that tells me otherwise just yet. Yeah, and you can see here, there's a bit of a disconnect again from that widening. But if you look at the lower portion, I'm on the 1 hour. I wonder if we could do something like symmetrical, since it is playing out like that. Maybe we could try that. What is that? 28 degrees. Sure. Yeah, I mean, it would be similar to this breakdown anyways, because you'd see it drop and then hook here if it were to hook. Not much else to learn from that, so just kind of delete it. It's just a thought. It's like in my mind, we've already done a lot of these upside targets. I feel like I don't think there's much mystery here, I guess what I'm trying to say. Like, I really don't think at this point, I wouldn't expect much more other than possibly running up to, which is really soon. I mean, this week, if you can see the advancement, I think you're going to see 780 this week. I really do. I don't see much else at this time that makes me think that's not likely to happen. There's a secondary one right here. I keep deleting it. This one sometimes could cause problems. So this is one in which, you know, again, it's sort of like a lot of times these markers aren't really, they're not really trends. It's more like it's more like a creek or a trajectory where it's kind of defining a lot of where price action might later gravitate, but it's not really giving you like the sense that there's any real support here later on. That's not what I mean. So I wouldn't call it like a trend support. Clean this up a little bit. We're going to leave that one. I'm going to leave this. I think those are important. And then I'm going to get rid of this higher one for now. So part of the reason why I don't like this pattern is it reminds me a lot of a flag, which is often distributive. There is an ascending accumulation that kind of looks similar, but technically this hasn't broken down each time. It's gone below and done really big throwbacks to creeks, but that's what's generated this up, down, up, down, up, down motion. If we were to find support here and then push up, that would be an example, again, sort of like what happened back on Wednesday, but if it were successful, then you could see how that would then break above. So if this kind of price action happened here and we're successful, you could see how that might break above that trend, and then you're kind of out of this schematic. But likewise, a distributive effort in the same area, to me, would signal probable downside. And I've said it enough at this point that I think you guys get it. And it might be a little bit annoying because you're like, well, still, Booksy, you know, you're looking right here at the 1 hour. Like, couldn't that still distribute and then catch high and, you know, finally like go? Sure. I mean, it could do this kind of indefinitely. I mean, the market can do whatever the market does. I don't think that there's a reason to doubt that. Like, oh, so you're saying it could just chop again into another Friday at 5 or something? Yeah, I mean, it's possible. Max pain might even be like 450 or 5 again. It would not surprise me. I haven't looked yet, but I feel like at this point I'm like, whatever. You know, it probably is the case. If I were to say I had a job here, it would be to consider the possibilities. So that's what I'm trying to do. So yeah, of course, this isn't like the only two scenarios. There's also the sideways, which is always present in every week, right? You got sideways scenarios every week that you can choose from. And I don't really feel like they're out of the realm of possibility here. What I'm trying to do is kind of gauge which one's more likely, I suppose, depending on the setup. We really won't know until we see this finish. So I'm inclined to think, just based on generally what's happened in the past for AMC, that we probably won't know until tomorrow. This initial move looks good, and how we close today will be important. But we may not know until like right before close or early in the morning tomorrow. Thus far, today has just been a double flush. I mean, flush down, flush back up. Yeah, we're up 5%, but if you look at pre-market action, we're pretty much just sitting where we were pre-market. So it looks to me like a kind of a reset. Yeah, I think we might see some more flushes still. I don't like it for us, but it is what it is. So I was looking at this line. I said this might cause some issue because we've really gravitated along it, and it seems like we're kind of wrapping our finger around it quite a bit. I would say that these kind of trajectories outward, they tend to define some of the price movement later because they were important in the past as a place of resistance or support or whatever. So if a bearish operator has found success in the past off of a particular trend or a particular trajectory, finding support or selling off or whatever, and the bullish operator is the same way, right? They found that that's a place of high liquidity, or it's easy enough to kind of formulate their rejections there or supports there, then it's just good to mark it off. And what we've found is that on these setups where you've got big runs that follow, is that typically that early setup ends up defining a lot of your supports and resistance. The run itself is hard to read because it's just kind of straight up. Like, you can mark off levels as you go. You can go back and you can observe, like, okay, here's where we're trading, and that's what we're doing on GME and AMC today. We were going back and looking and saying, well, here's where we were trading before, you know, when we came down, and, you know, are we just checking these levels and yada, yada, yada. And all that stuff is good and true, I think. But it's these bottom trajectories that often define the movement. And ultimately, yeah, you're going to pick some of them as trends. Some of them are going to act as supports and resistances. Some are going to act as, you know, other things. So in this case, this is acting not so much as a support and resistance just yet, but it's really acting as a way of, as a trajectory, as a way of kind of, that's the general direction of the sine wave. So this is kind of the earliest form of the sine that we see, the wave form, right here down at the bottom in May. So then we're kind of in that middle right now, and that's probably normal. I haven't really looked and seen. I bet we can go back and find examples of that, where that's where you end up chopping a lot before just a determining action. So I think it would be important though to note it because, for example, if I'm in a range and I know where the center of liquidity is, if I see it push away from center of liquidity, that often is an institutional move in a range because you're moving from center, and that typically could give you a heads up as to direction. So like right now, coming back down again at 504, like that's not strength. So you can slice it any way you want, but the fact is that we're still not holding 505, and we were talking about that level this morning. We didn't hold 520 or 510. We really had a strong wick. I'm on the 1 hour here. We had a strong wick up to 540, and then we just kind of came back down once again beneath the previous peaks, and now we're going to see how sellers do like their thing. We're going to see if they can take it lower. Unfortunately, what's marked a lot of these moves has been high volume buy-ups followed by ridiculously slow but also kind of high volume sell-offs. Like they've just taken longer. So they've typically gone from like the peak motion here to being like a quick sell, and then you just sort of meander for a bit, right? And all of these are the same way. That's why I've been saying like don't particularly like them as an accumulation at this time just yet, because it's consistently been that way. Like we've had high volume buy-ups, and then you get these sell-offs. So you're peaking volumes on these tops, which isn't really good. And then the one thing that's been kind of slapping it in the face has been, well, yeah, but we keep making higher lows. Yes, I know. And that's the problem, right? Is like, it becomes a question of like, is it still accumulative if it's able to make higher lows? I don't necessarily think that's the right way to look at it, but whatever. And then we can look at something like the 1 hour, for example, and we can say, well, it's actually been finding more and more and more support across your EMAs, which is true. That's a true statement to make as well. So that's a sideways motion for you, right? It's like every time it goes up versus goes down, you're having to kind of measure it and see what you can see. And really the volume is kind of the only thing that we've got right now that to kind of really help understand it. Typically in a flag or an LSPY, you have really low volume chop back to the upside. So if I were looking at this on the big picture and I were to ever ask like, hey, is this low volume? Well, yeah, I mean, compared to the bottom it is. So does it fit the description of a flag? Yeah, thus far. We just haven't made any real moves from what we can tell. Everything's been very contained in that flag action. So, and then part of me thinks maybe the reason for that is because we haven't reached the channel. Like there's a larger channel here at play and we haven't reached the side of that channel yet, you know? And that's another thing that we'd have to kind of contend with when we get there. Is that perhaps, and you all know this, but if you're in like a channel, I wish I could show it better. So like, for example, if you're in an uptrend, right? And you do like you're in a long-term uptrend, right? So let's say you're going up and then suddenly, you know, you kind of start chopping back down and this creates a flag, right? Well, most people are aware that that's a flag because it hasn't met the side of the channel yet. Like at this point, there's not really much to say. It's sideways action. You could say it's a, you know, accumulation or distribution, but until it gets to the side, there's no decision that's made. And especially if it's done this before, you know, historically, like this is typically how this thing trades. Like you end up with a, you know, a flag every few years. This is very typical for a lot of stocks in the market. Although I wish more of them were like that because it'd be super easy, right? That kind of flagging action, super normal. We would expect it. But a downtrend is no different. And in a downtrend, your flags just typically go the other way. And that's kind of my concern here is like, it's hard to define it because there's not that many touch points. But if you have like if that's like an early signal, so these two particularly 1, 2, 3, 4, there's 4 marks here. 1 to 4 rather, looks like it could be a channel. 3 to 4 here also looks like it could be a channel marker. So it kind of begs the question, like, are we just chopping until we get to the side of that channel? You know what I mean? And that's another way to kind of look at, maybe a simpler way in some ways to look at this motion. If you don't like the idea of Wyckoff and trying to analyze the volume profile that much. And then typically what you see is in flags, if the volume is really low, and I said LSPY, which is a last point of supply, that implies that it's going to go down again. So it's the same as saying it's a bear flag, right? You're making an assumption about the range. You're saying, oh, I think it's going to go down again. Well, if I say that, then I'm going to analyze it in light of that, and I would look at this and say, is there a increase in buying volume through here? I'm seeing a little bit of an increase in spikes, but overall, in those spikes, but overall it's been pretty flat. Like the volume's been fairly consistently low. Like if we just ignore, maybe it'd be better just kind of scrub over here. And we just kind of ignore the early part where there's still a high volume. We just kind of observe the volume here in this range as it's been for the last week or so. I think most of us would probably say it's been fairly even keel. You know, we look at regular trading hours, most of it's been fairly consistently there. There's been a few, you know, pops here and there that have been really high, but I'm not seeing much follow through on it. I don't see a steady increase or decrease in buying or selling. I mean, we were talking about the selling here. They're just selling from the same level and over. Maybe a mild increase in selling. Volume on this looks more like a bowl structure. So you're getting high volume on the left side, kind of lower in the middle, high volume on the right. Again, more indicative typically of a distribution, but you never know until it finishes. So if I were to ask, like, do I think this is potentially like an LSPY before a drop? Well, yeah, I mean, a lot of times, and this is where I'm getting at with this, is a lot of times that flagging motion is specifically to get you back to a level, right? Like you're coming back up to a particular support level or whatever. And that's kind of what we're seeing here is like we've been chopping back up towards this like 545 area, you know, and maybe it goes a little higher, but that's my bigger concern right now with this range is that we're getting kind of jerked around to think that this is possibly going to blow up because you're getting these big moves. People get really excited. And then, you know, it's just a short covering or something, and then you're just selling it back down until you get back to the top where you want to be. And then you make your distributive action and then you drive the price low. And that kind of stuff happens in the market all the time. What I'm trying to say is that like maybe it's these channels, and that's really what we need to be paying more attention to. There is one schematic that really looks like an ascending bear flag. I mean, it looks like a bear flag to me that ends up being bullish. And every time we kind of get to that mode of like possible moves, we've been getting stuck. So I have a feeling that that's probably not the best way to look at it, is not to continually get your hopes up, but to just kind of watch the price action and just let it be what it is. Because it keeps doing the same thing over and over again, right? So today we move up. We see that there was a divergence to some degree in the RSI on smaller time frames. So it looked like you were going to need to have a pullback. We knew that this was probably going to be a bottom early today, so it's easy enough to swing if you wanted to swing that. There wasn't any real indication that we were going to just continue to advance unless we found support high above really like 520. I mean, at this point, you got to be pretty high up because we're ascending. So those levels have been pushed up, but we're still not finding support. Like, I don't know what to tell y'all. Like, every time we push up, we're just kind of sliding back through levels, you know. It hasn't been very good. And that's what I call stopping power. It's like, yes, an accumulation ends with a whimper, typically, but as soon as it goes, it goes. Like, there's no question. There's always stopping power, you know. Like, we would have had this hold, and you would know, like, really clearly this is advancing, you know. In the event of an accumulative break to the upside. And the wishy-washy stuff just tells me that it's not time yet. So again, it's like, that could happen today. It could be 2 hours, 3 hours from now, but I just don't see it as any different from what we've already experienced so far. Feels like the goal here has been to sell from 5 repeatedly. So if the sellers can't sell from 5 and drive the price low, they'll probably try to form some kind of a distributive range here and try it again, in which case you would see like sideways. And at that point, if the buyers don't step in, then I don't see what we're doing here, you know what I mean? Other than just, again, it could be that a short's covering and then letting the stock go, and the short's covering, letting it go, covering, let it go, that kind of thing over and over again, which isn't good, you know. It's different when there's an accumulation effort. Usually you see those advances, there is a pullback to a higher low, but it's always like, I don't know how to describe it. It's like elevated. Feels a lot more elevated. So I'm hoping this is still bullish and that we're going to see that move up. I would love to see 780 this week, you know. I'm all for it. I'm just not really confident that we're going to see anything this week if we don't see it set up today. Tuesday was my day. I'm like, all right, we should be moving. Yeah, GME is having a deep retracement here. I think the first move is not always the best gauge of anything. So just kind of wait on it. This is just a potential, like, you know, retracement. Right now it's come back down to the, you know, 30% retracement, whatever. 50% down, back down at like 2182. So, you know, that once you get past the 50%, then you're really teasing out the gap. You're moving past center liquidity. This was a pretty even keel, like 50-50 move around center liquidity. So like 50% basically gets you back to the 2150 level on GME. And then you could still advance from there. You know, you're kind of pushing your luck, I guess, is the way I would describe it, by dipping low, because you have to then, you know, recapture levels. All right. What else do we want to talk about here? I talked about charge point. I mean, the one thing that's been really positive about ChargePoint is it hasn't really done anything to really make me think that it's broken out. I mean, unlike AMC and GME have had these, I mean, this had some big swings, but it's not been like way out there. It broke the uptrend. I mean, that's a big deal. So this could be like the first sign of that an incoming drop is going to happen. I'm watching the RSI on this, and it looks like it's kind of boiling up. This is a 30-minute. So probably a good indicator there of a bigger movement coming. is the yeah, that kind of narrowing of the RSI. I wonder if everybody's going to wait for their earnings coming up. Yeah, FOMC. I'm just going to chop the markets for another week. It'd be a letdown, though, for sure, wouldn't it? We were kind of hoping to have something big happen. Okay, well, it's 12 o'clock. Let me, I'm going to take a quick breather. I'm going to get some coffee. I'm going to use the restroom, get a snack. When I come back, I want to talk about if GME and AMC are still just chopping. I really want to go through this. And even if you're not interested in MPW, I think you're going to find it to be really interesting. So I would still recommend, sticking it out. It's a really fascinating chart. I don't know how else to describe it other than to say that it simplifies things in some ways. It's going to make you feel a little bit uncomfortable maybe in other ways because the predictive nature of these cycles has been, and I know they're close enough to being 4-year cycles that I don't feel it's that unusual. It's just the timing of it, and I'll explain it right when I get back. So what I'm going to do is keep on the, I'll put the AMC over here. I'm going to leave it on the 1 hour for now. I'm not going to be gone very long. I'll be gone for like 10 minutes at most. And then I'll take a break, eat something, I'll come back, and then we'll continue. But for now, let's just kind of take it for what it is and watch the levels as they go. Okay, and I'll be right back. Alrighty, I'm back. I'm not taking a long break, just a short break just to clear my airwaves, fill up my belly, excuse me, etc. There's nothing intrinsically better about drawing things with. I'm just looking at this other Shonda123 said, she's probably not here anymore. I don't know. A lot of people leave the stream when I stop and take a break, but there's nothing intrinsically better about drawing like a million lines. You can trade. Let's put it that, like, trading and charting are two different things. So trading is the act of buying and selling, or selling and buying, right? Like, that's it. And you can trade based on a single line, you know, and it's your plan. Like, trading is your plan. Trading is your entries and exits. Trading is your confirmations of breakouts or breakdowns. Those things can be aided by charting, but you don't have to chart everything in order to trade. So a lot of folks, when they see the lines, they think that either A, I'm overcomplicating it because you don't need that for trading, and I would say, yeah, you're right. Or B, they think that they're not doing enough, that they seem to need to know like why am I not able to do all this other stuff? But you just got to remember, like, charting is different from trading. So a lot of the stuff that I do on here is charting. It's not just trading. So it's me examining and analyzing a lot of things. So that's the difference. So I don't think of them as the same thing. When I trade, y'all, I set what I think is like a stop loss level. I set that, and then I go from there. So, I don't really worry too much about every single peak or every single valley. Like, I'll enter a trade on a good average. Sometimes I'll try to play a bottom, and I'll play a breakout. In this area, what would have been the most efficient way to trade this? Well, it wouldn't have been the way I charted it. This didn't amount to much of anything in some ways. I mean, there's definitely pieces here that were helpful to know because we're looking at this from small picture up to big picture. But if I were just trading this, like, it would have been more than enough to just look at the 6 minute and just trade like top, bottom, top, you know what I mean? Top, bottom, top, bottom, top, bottom. I mean, it's so simple. You don't need to have all the answers in order to trade this pretty efficiently. You don't need to have every one of these lines. I mean, I'm not saying you shouldn't think about those things, because obviously it's good to think about those things, but like, this would have been an efficient way to trade, here to here to here to here. I mean, it's not complex. I think the 6 minute, I've talked about this pretty frequently on this channel, like the 6 minute RSI is a really easy one to use for AMC when it's going sideways. When it's not going sideways, it's not the best one to use. Like, it tends to kind of be so-so, like, it can give you really mixed signals. So I would not recommend using a 6 minute RSI when you're making massive moves up and down. But if you're just chopping and you're starting to establish a range, it's a really good one. You don't need to know much else. I could have traded this with just the channel lines and the 6 minute RSI. I didn't do that because I wasn't looking for those kinds of trades at this time. But always, in the past, I've had a lot of success when I'm doing sideways action by just doing that. So I'm just telling you, like, it's a difference between trading and charting. And you can be a really, really good trader without having like extensively complicated charts. Make sense? I would recommend your charts don't look like this. Like, this is like a learning module for me. Like this is a way for me to understand price movement and to understand big picture or small picture up to big picture and vice versa. So that's the way I see it. This kind of stuff right here is probably pretty effective trading methodology. This kind of thing, this was just a pattern breakout. This is a little different. So this is a little different than what I was just talking about a minute ago. Like this looks okay. This is a very clean, simple chart to me. Some might look at this and say that's not clean or simple, but it is. It's very simple. Like you had a diamond structure, you had a downward target, you had an upward target. When it got to the downward target, if it failed to advance, you're at least going to see it come back up to this creek, and then we'll see. And then it ended up gapping up. So, I mean, it's an easy enough trade from bottom to top or from here down. You know what I mean? Like the breakdown to the breakout. It's the same values. Easy. That's all you needed. The even atom bottom, that target hasn't hit. And it only hits if we close high, right? So again, like just simple rules for trading, not really complex charting. You don't need a lot to know, you know. And I've drawn these channels because to me, like channels are simple and like they relate to creeks and they relate to sine waves, which is how all the market moves. All the market moves in waves. Ups and downs, super straightforward, right? That's why the RSI can be a really easy one to trade. If you're not positive about where these markers are, you could have traded, you know, shares here, short, you know, buy, short, buy, short, buy. That's good trading. I mean, you could make money doing that. So there's nothing wrong with that. Yeah. So just to address that concern, if your charts don't look crazy, that does not mean you're not a good trader. You might be a great trader. You might be very profitable off of very simple trading methodology. And I would highly advise that you guys find good trading methodology to use. On our Discord group a while back, I shared in resources just some freebie books. They're really simple, but they're good. They're just kind of basic understandings of charting patterns and channel trading and penny stock trading. I mean, stuff like that that is not going to appeal to everybody, but very simple. And I think that's all you really need. You know, there's other strategies. You get to like options trading. Things get a lot more complex. You're going to be paying a lot more attention to the options chain, obviously, but you're also going to be doing things like, I know Colin Gladman was really big on like the wheel strategy. A lot of people like to sell calls, you know, and covered calls and stuff. And those things can make you long-term wealth over time. But a lot of the money he makes on those big trades are very risk-on trades. Like he takes bigger positions and risks more. And he's in a position where he can do that and make a lot of money. A lot of us, we're in positions where you're going to be building up wealth over time with smaller trades. So again, just because you're not like doing crazy charts or making huge gains every 2 seconds does not mean you're a bad trader. The best traders have a system. They stick with that system. They make money accumulatively over time, and eventually it grows as their account grows, their gains grow, and they're the ones that typically end up surviving in the market. People that try to trade too much or too complicated don't tend to do as well. So, self-critique, right? All right. I was going to talk about MPW. So I'm going to keep an eyeball on the price of AMC. Right now, it's sitting at 5. I don't particularly like it at 5, but I think it's just center. It's like a center point for this channel, basically. There's not really much else to say just yet. We might find support here and re-advance back up to 523. I think it's possible that we do that and chop into Wednesday and then make a decision. That would not surprise me at all. I could see us potentially doing a deeper retracement on this upward move. Since we did make a higher high here, it's still advancing. But, you know, we mentioned earlier, like, this is kind of a big ask for AMC. It has to go, there's a lot to ask for here. It has to go not only above these trends, but at some point it's going to have to advance. So when you look at this kind of stuff, just remember, like, this middle price action isn't really saying anything right now just yet. So we don't want to read too much into it. There is a good thing, which is right at 5 is where we dropped here. It was 505, I think, on the diagonal, but it was 5 right on the level. That was back on Thursday. So we're revisiting a previous area that we sold off from. So we'll see if we can find support here. Support here could be positive. All right. It doesn't mean that you're going to hold it. It just means it's generally a positive thing. And I think selling off here, we'll just see. I would say 483 is next. GME is kind of doing the same thing. It's back at like a center mark. It's sitting on like the previous tops. You can see the supply tops from over here right around this level at 22.98. I've got this kind of crazy idea with that GME might form out a larger downward motion. Something like this could relate to AMC going into mid-June. We know FOMC is coming up as well a week after that. Earnings report for GME. So, yeah, I could see it being a 2-week journey here, potentially. Unfortunately, because I know I said Tuesday, I still think today is really important. I do. And short weeks, typically I have a lot of compressed, we call it compressed price action, right? Where you see some good setups follow through. But it's not the same every time. I don't know. I wanted to talk about this MPW chart. The reason I want to talk about it is right now this looks super like messy, right? And you probably don't have any idea what's going on. It just looks like a web of horrible charting nightmare, right? There's actually like one single thread that is probably the most critical part of this. What I'm going to do is draw it out, and then I'm going to talk about why this thread is like super important. And I'm going to show you guys up close kind of what I did and why it's significant and why I think that it may indicate where we go in the future. And I know it's a little crazy, but I'm thinking even maybe over the next, potentially over the next like 4 years. So there's a strong chance based on the setup. So what I did is I left them long term. So I could have truncated all of these so that they're just short, because actually all of them are locked. So these extended lines that you see right here, all these points are locked onto specific targets. They're closing values. So how do I describe how I came to this? Okay, so I looked back at MPW and I thought to myself, all right, here's real estate. Obviously, you've got the 2008, crash. That's an easy one to kind of start with. Most of your market, if you go back, that's been the historic run since 2008 up to, basically up to like the COVID era. And then we get into the recent couple of years where we had an extension in 2021. Most of the market drove up higher. And then going into 2022, you had a major market pullback. So this is not really that different from that. You can see that in 2008 up to about 2022, you've got a pretty consistent uptrend. Aside from this first spike, there's a very consistent uptrend here. It's steady, and it's not very hard to read. Okay, so I could have done this with like SPY, and I'm pretty convinced that no matter which chart you choose, I'm willing to bet at this point, based on what I found with this, is that this probably is going to work no matter which chart you choose. And not only that, but I'm actually pretty confident that you don't even have to be like exactly in the same spot. I think if you're in the general vicinity, that this is going to indicate the tops and bottoms. This is like a market-wide waveform pattern, okay? And that's a bold thing to say from just looking at one chart, right, and not really looking at anything else. But there's a reason that I'm saying it, and I think you'll see what I'm getting at. So I started with 2008, and I kind of went backwards and I went forwards, and I noted that there was clearly like a peak over here in February of 2007 and then another peak in 2013. So I was like, well, let me just try to cycle it, because historically real estate plays into cycles pretty well. So that's what I was thinking about with this. I was like, well, it's not AMC, so maybe I'll do like a cycle chart on it and see what happens. And here's what I found, basically. I found that didn't really work. So if I went to 2007 to like the bottom in 2009, that's a 2-year cycle. It does present itself with possible ups and downs, but it's a little too narrow. So then I decided I'd go back, or I'd just use the bottom and the top. So I used the 2008, 2009 crash to the 2013 top. And I don't know exactly how this came about. It must have been an hour or so of me just kind of going back and forth and back and forth. But essentially, like, I played out different scenarios with even time increments. So I used time cycles, right? And I played out like different time cycles, like from here to here, right? You can see those obviously play out. But then I was really specifically looking at ups and downs in the market. And I was looking at when this kind of reached the low on this waveform versus when it reached the peak over here. So I think this is how I originally built it out. And this number came up, and it was 201 bars. Now I'm on a weekly chart, okay? But it's the exact same every time, as you would expect in a cycle. So it's always the same. Each one of these is 201 bars, which is 1,407 days. I already made note and told you guys earlier, I think 201 bars is pretty darn similar to like four years, 52 weeks in a year times 4. You'd get a different number, but it'd be close enough. You could say it's like 4 years, okay? I'm watching this and I'm looking at, okay, well, then 4 years backwards and 4 years forwards, yada, yada, yada. This cycle would then start on an even increment. Others might not if you use this bottom. Some charts didn't exist, right? 4 years before the 2008 crash, for example. So you can go forward, but you might not be able to go backward, so on and so forth. Some charts don't exist till even more recently. So like, how would you measure those? Well, you'd have to pick a different start date, right? Or you could just assume that the earlier part is like compressed or something, okay? And you're going to find that this is kind of interesting, I think. Especially when I show you what it does to AMC's chart. So when I went back, what I did is I used those markers. So at first I set up all my measurements, and these are the exact dates that I picked out. These are all the same, 201 bars apart, so 201 weeks apart from each other. And what I did is I used bottoms, I used closing values, and I used, in some cases, opening values, but almost exclusively just closing values, okay? So each of these guys that's anchored, that I've got, is anchored to values that are basically 4 years apart, okay? And what I noticed almost immediately, and you can kind of tell, is once I identify the tops and bottoms of the sine wave, wasn't that surprising to me, because I've been doing this sine wave stuff on AMC, and we've been talking about this for a while now, and I've been talking about how, like, well, every time we do sine wave stuff on AMC, when you get to a top, like an accumulation or distribution, for example, on a top, that these end up being significant markers, right? Like, these end up marking off important levels, like these cat ears mark off important levels, and then the ascending level marks off other important levels. And a lot of times these end up being the continuation of the waveform later, is like you may end up getting down here, and then this ends up being like your spring, and then you end up getting up here. This ends up giving you clear markers of like where that waveform might be going. So before you get kind of weirded out by the anomaly I'm about to describe, just know that, like, this is what I've been doing the whole time. So it's not like that. I wasn't that surprised to see that if I correctly identify bottom cycles and top cycles, if I correctly identify the bottom of the wave and the top of the wave, there should be a series of markers, right, on every bottom that indicate where the top might be. So just to repeat that, there should be a series of markers on tops and bottoms that indicate, and this is way off in the future, right? Future tops and bottoms, right? As per the wave. So the reason that this kind of struck me as interesting and worth analyzing wasn't because of that. Because that part in and of itself is like, I don't know, I kind of expect that. I think it was more that I got it right. And I think that kind of threw me off. That like, I think I got it right. And I was like, well, that's weird. Because I did try a few different ways, didn't work. And then when I got it right, it just kind of clicked. And I started noticing that there were a lot of really important patterns in this 201 bar period. So for example, in the very first one, right, and this again is on MPW, this bars pattern period goes from basically up here around $11 down to about $5, okay? And you'll note that the angle at which, and again, I can kind of use this to kind of follow through it, the angle at which this sets up is evident in the very earliest months. I mean, there's like 2 or 3 month period here where this all sets up. So it sets up a trajectory right at the beginning of this 201 bar period. And that to me, again, it's not like unusual. It's just, oh, okay. So basically like we're going to anticipate where a bottom might potentially be for a supposed crash that hasn't even happened yet, right? There's obviously inklings that this is a future potential spot, right? And I don't think that it's meant to say that like, oh, it's all rigged or something, although most of us know that it's fairly rigged, that 90% of the market is, right? But I also think it's a designed, that doesn't really indicate necessarily where the bottom is, but where that waveform is suggesting that you go. And ultimately, like this bottom that happened after the 2008 crash, I don't think it's particularly like related to just the waveform itself. Like I think it's there as a bottom and it's as low as it goes technically for other reasons. But I think the recovery is where things get really interesting, because as soon as it recovers, it reassumes that trend that it set up 201 bars earlier, way over here, right? So this is 2005 to 2009. It comes and it grabs that trend. And not only that, but it respected it on the way down. It was kind of like giving it a nod as it passed through, right? It's like you're crossing a road and then you're doing a U-turn and getting back on that road again. And it not only does that, but it hits it like basically perfectly. Now you might say again, like, well, that's just because it's in a trend that exists, so it just grabs it, right? Yeah, but you got to remember that trend existed 4 years ago and it barely touches it, right? And it's an indication of a waveform top, but is it the actual top? No. The actual top didn't happen until 2007. So this is where things get kind of interesting, because then I'm like, well, listen, it's okay to have this idea that like these peaks hit, but in order for this to be, let's just say like effective, this would have to be consistently the case, like where it's irrespective of tops, but it's always these markers. Like it doesn't matter if it's the peak or not, it's always these markers. So I went through and I looked, and at the next one, and I'll say, again, this one's probably one of the weaker ones, but I go to the next one and again, it's like, oh, it was respecting this trend that really isn't very established at all. Like there's not really any way to know which way this was going until about here. And this was September of 2011, right, when it makes this bottom. But again, fascinatingly enough, when you go back and you look at this and you do an overlay, and I'll show you what I mean. From the waveform perspective, this is like a 50-50 overlay on an S-curve. And that 50-50 has a perfect cross-section, and of course, again, peaks at the S-curve, and that's that. And you're kind of like, well, why does that matter? Like, anyone could have done that in retrospect. That's easy, because you already have all the information. Yeah, but remember, I'm assuming this is like a cycle. So my assumption is it's going to hit a peak on or near this particular time. It's not that I already can look back and say, well, this was an S curve and you can draw it with a 50-50 and there it is. Anyone could have done that. It's not that, it's about the time. So I'm not talking about necessarily where the price is, because I don't necessarily know where the price is going to be until it establishes something like this. And then you can say, all right, if it's an S curve, it's going to go up another 50%. Again, easy to do in retrospect. It's more about the timing of it that I care about. So at this point, I'm just going through and I'm mapping these out, and I start noticing that, like, yes, every single time, once again, like every single time that there's an established top, meaning you hit the 201-day mark, it starts driving a price that is, again, setting up for 4 years later. You're now driving a price action here that tells you where you're going to be in a 4 years time. And it's correct every time. Not only is it correct in this particular example that I'm showing you, but it drives itself across the market. And I'm going to get to the AMC stuff. See, some people are kind of upset about the AMC price movement. I don't know what to tell you other than, you know, it is what it is. I mean, you have a push up this morning and you have a retracement, and if it doesn't hold, it doesn't hold. So we're kind of selling off of 5. That's happened frequently. We talked about it this morning, like 1, 2, 3, 4 times. This will be like the 5th time. I'm not happy about it, but that's that, right? And as you can see, like, we've still got support potentially above 485. That's kind of your liquid center. But nothing really happens with AMC until you get high above 520 and you find support. So nothing's really changed today. I know you're frustrated if you saw the move and you were hoping for something big. I saw the move down. I saw the move up. Kind of all reads the same to me right now because it hasn't done anything to advance beyond the trend that we're in. Like, it's all happening within the same, area. The volume here is fairly high, into that peak. So we want to see it find a bottom on low volume and then get another up thrust, but I can't make that happen. So we're just kind of waiting. I would say you don't want it to come all the way back down, and you definitely don't want it beneath 469. But unless that were to occur, probably wouldn't be overly concerned about anything right now. Just kind of wait for the price to settle out and see what happens, okay? All right. Now, at this point in my little adventure thing that I'm doing here, I'm noticing that these extensions also seem to sometimes apply. Like, this continued up after the 201 date in 2013 and did continue to make highs. It made a higher high, and it did follow through on that. So, like, if you look in real close, you can see, like, there's a consistent kind of wraparound here, and it's relative to its own self, of course, but you do have that trend at play as it continues. So I decided at that point I probably should let it continue. Like, I should let these angles continue and see what happens. This one, again, is probably one of the more kind of freaky ones. This is one where you get a really early 1, 2, 3, 4 touch points. It's right on that breakdown, right from that first one. So again, using a cycle, not anything else, not a particular price high over here, but using rather where the closing value was on that cycle versus these other points. And that's a big distinction. It successfully gave you a pinpointed target of exactly where the price closes in 4 years' time, which is kind of crazy. About 4 years, 201 bars, okay? I think that's kind of crazy. Now, the reason I said earlier that I didn't think it was a big deal if you were exactly right, obviously, I think it's a big deal when I'm saying stuff like this, because I'm saying, look, if you don't get the right point, it's not going to point to the right spot. But I think, again, that the 4-year mark could be a little flexible. I think some of these are going to drive to different prices. It makes sense to me knowing what we know about waves, right? Because in a waveform, you're gonna have like some of these obviously are going to be pointing towards different places, and you're going to have like an infinite number of tangents, if that makes sense. And I'm not really looking for tangents here per se in what I'm doing in this particular example. This is why I didn't know if I wanted to go into this today. I feel like maybe a little bit much. But you're going to have a lot of tangents, right? We've talked about this nature that like this tangent on the top will always give you like the center point, right? But within the price action, these algorithms are going through here and they're marking off like dozens and dozens of points as you're moving forward. So as you're going through these tops, right, you're getting like so many different relational points, and all of these could look like super different from each other, but you're getting like dozens of touch points. And I think the combination of these, when you see them, are probably going to indicate places later that you're going to find. So like no matter what you pick, is what I'm trying to say, like no matter which ones you pick out, they're probably all going to find some kind of importance at a later time. You know, there's going to be some significance in how it interacts with these as it goes across. And I think it's all relating to, again, tops and bottoms. So if I'm thinking about price as a directional indicator, it makes sense to me that there's two major directions in every top and bottom, right? One is a direction like down towards the next bottom. Like there should be some points of interest, right? There should be some indication like, oh, this is the direction we're heading. We're heading towards this particular bottom. You're probably going to have more than one, right? You're probably going to have some early signs that like, yeah, that's where we're going to head later on. And even as you finish, you might have some like final signs that are maybe a little different, but it's like all of them are kind of directing your attention to the next bottom because you're turning down. And I think vice versa is also true. As you're going down, you're going to start having those trajectories, right? And they're going to be pointing towards the next top. We see this on AMC on the historic chart that there were very, very clear trajectories, very clear uptrends that pointed to the 72 top. How is that possible? Well, I think because, again, you're kind of looking at it through the lens of not of like a pure waveform, but of like angled ascents and descents. It's like you're establishing little micro trends and micro trajectories that are pointing you towards not an inevitability per se, but a probable outcome. Okay, that's the direction that it's going. But in this case, it certainly seems more like an inevitability. So when I'm looking at this stuff, I'm thinking about it in terms of like, all right, I've already chosen my anchor point, right? I'm using specifically a time-based anchor point. And then I'm saying from that time-based anchor point, if this is a downward wave, where is my downward trend? There it is. Not only does it point directly to the closing price for 201 bars later, but it's doing this consistently across the market. And so at this point, I'm taking another one. I'm driving it back the other way. So I'm using opening and closing values. And once again, here's a downward wave, here's the upward wave. So again, 201 bars later, is this the trend that defines the motion? Yes. So hear me out. This is what I think I'm identifying. I don't think I'm identifying like a perfect cheat sheet. I think rather what I'm identifying is a really critical angle. Like there's a really, really critical like timing element to it that's you're generating a very specific trajectory within a certain allotted amount of time during these top and bottom waves. And I don't know exactly how I pinpointed it the way that I did, but I did. So even looking back on it, I'm kind of like, there's probably more than one way to identify a bottom here. And it's not the bottom. And that's the weird thing is it's not like, it's not giving you like the lowest low. It's giving you a price target over time, which is very strange. That works again, like basically perfectly. Like that's where the price is 201 bars later. It's going to meet that line, which is strange. So if you have two pieces of information, if you have the trajectory line, so if you have the proper we're going to call it the proper wave trajectory plus the timing. You have, well, let's call it like a, well, I just say we have a target. So it's not, again, I don't think it's it's a complicated thing. I think it's just a matter of like, I think I've somehow identified like a primary trajectory and when it occurs. And not only is that the case, it's often like in this case, it's like very much so like the waveform too. Like you can see on this one, I went ahead and let it go backwards in space. It's already being established back here. So there's an argument that it could be that I'm right in some ways and I'm wrong in other ways. Maybe it's just establishing it because it's a bottom and this is close to a top. And same down here, like this is close to a bottom. So it could have been establishing it already. But this one's not. This is like way off. Like this seems like it's just kind of jumping on the bandwagon and it's running up early and then selling off. But this is not a peak. It's not a peak moment. And they're not always like, again, at the peak. So that's kind of the curious thing, but they're still working. Okay, so then I'm looking here and I'm like, all right, well, you have very clearly like this is established. And not only that, but this one just happens to be like a really strong one. You basically create like a perfect waveform pattern around this guy. Ends up being kind of gravitating along it until it finally doesn't, right? You see the M shape. It's not the center of it, it's not. But it ends up being like this really critical marker later. It's essentially like as high as the stock gets. It gets to that point, it breaks down. And this line is not, again, I don't think it's a trend per se. I think more of a trajectory is a better word. It is respected for a long time. So this is, again, 4 years later. And you can see that it's still like pinpointing. It's still pinging along that trend. So then you come into the present time frame and you're like, well, there's one really obvious one right here. And it establishes right at the beginning of this trend. The issue, of course, is that this doesn't afford you like a really perfect example because unfortunately there's nothing else here, right? So then you can go look later and you can say, well, look, in this case, there's two lows that are made right after 2020. There's a low in December of 2020, and there's another one in January of 2021. Those two lows, to me, indicate that trajectory. Like, if I'm going to draw them out, like that to me is probably the best one to use. Do people already like know this information, and I'm just like the only one that doesn't know it? I feel like I'm consistently losing viewers. I'm kind of confused as to why, because it feels like this is something that I would feel like everybody would want to know. And maybe you already know. Maybe I'm like dumb, and you're like, well, yeah, it's an election year, so yeah, of course. Well, that's what my argument was before too. Is like the election year cycles happen about every 4 years, and that. But the idea of it being an up and down cycle consistently. I'm not sure, I don't think they really add up that way because each one is like opposite, Anywho, this would be your trajectory, right? So I used it and I didn't really like it because it doesn't seem to even respect it later. What I did is I looked back and I said, well, in some cases, there's not a trajectory that's like one size fits all. Like there's definitely a few here that you could have picked up on a lot of different ones. This is like the easiest one. The one that was established in 2017 by far is the easiest because it's got so many touch points all around it. For like the 6 months surrounding it, it's so simple that it hurts my brain, right? The one prior to that is not that simple. Like there's certain markers here that you can use, but at least it has 4 touches. So it has 4 touches surrounding it. This one has probably like a dozen. It's really easy. This one only has like 4, right? And then previous to that, this is one that's kind of like what we're experiencing now. It doesn't really have a lot to go off of early on. There's only a couple trend indications here, and that's pretty much it. And the only other thing you could do is look backwards at where it hit like a previous bottom, and that might have given it to you. And that's kind of what I'm doing here, because what I'm doing is I'm like, well, at this point, we're midway between a cycle. Like this should be the halfway point. If I take a 2-year mark and I go to 101 or 100 bars out, it's right here. So this should indicate, to some degree, this region right here should indicate this is around 2023. We know it's a downward marker, so there should be some indication of touch points here, because I don't think it's that steep. I already know it comes through this region around 12 or 13. I'm pretty confident about that, but there's no major touches on those first 2 wicks that I drew. It doesn't seem to like respect anything here. So it should be important. Like this should be the region where you're crossing over on the wave. We talk about the waveform going up and down. Any 50% mark between these two should have some kind of a important indicator. Like they all do. Like this is the 50% mark here. It hits it. This is the 50% mark here. It hits it. There's a couple exceptions, but even this one, like this one has none. This is the exception. This one has 0 hits on it. But even this one, it's like, that's the 50%. And it returns back to the original trajectory. So almost all of the time, halfway across from one wave to the next, should have a cross. So it should cross here, is what I'm trying to get at. What does that mean? And why does that matter? And ultimately, do you think that you could then predict where this is going to end up? The answer is yes and yes. Like it matters, because if the original trajectory is set in stone, which at this point I'm like, or not the trajectory, if the original price is set in stone, at this point I'm like, yes, it is. It's November 30th, 2020, period. Like that's where I'm going to go with. If that's what I think it is, and I'm very confident at this point, again, just based on what we've seen, I'm pretty confident at this point that it's going to do what it normally does. Like this is a top, so this is a downward wave into a bottom. Then this should indicate exactly where the price is going to end up 4 years from now, right? If I can identify the line. That's forward thinking. So no longer am I doing retroactive. I'm taking what seems to be a very strong pattern and I'm applying it in a forward model. So at this point, you're like, okay, well, what did you pick? I picked a few different ones. I tried some different ones out, and this one to me is my favorite. It's like an average of a lot of things going on here. I think, and I'm not 100% positive, but I think you could make an argument that if you were to average kind of these markers right here, this is kind of where that trajectory should fall. Does that make sense? So like, I don't know exactly how to be more precise than that, but that's, to me, these are the indicators that tell you. So right before March, and then as it's crossing through November 30th. So right before that big March 2020 drop for COVID, and then right around here. Like that's where the defining action takes place. There are other trajectories here. So I did draw another one down. I draw another one over here, blah, 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 blah. So then I go back and I look and I started picking out points, and I ended up choosing this guy. So this was a bottom that appeared in June of 2022. The reason I picked this is because it has an insane number of hits on it. So as I'm looking at this as, okay, my trajectory that I picked out, this 4-year, 201-day trajectory that I picked out should be crossing here somewhere, right? How many hit points should it have? I don't know. It could have only a couple. It could have a lot. But if you use the bottom from June of 2021, in this case, you get 1, 2, 3, 4, 5-ish, 6, 7, 8, 9 definite ones. You know, about half of those are kind of willy-nilly, but they're all cutting right through the same monster here. So you can see right there that on the weekly chart, and I'm using a weekly chart again, specifically, that those provide really strong evidence that there is a trend there. That this is something that's being distributed. We were just talking about distribution and how it kind of chops back up. Notice the upthrust and then the pullback and then the breakdown that happens right off the top of that line, right? This line that seemingly doesn't seem very important. You know, it kind of only starts with these two markers unless you're looking way back to 4 years or to 2 years prior over here. And then suddenly it starts adding up as it could be that main trajectory line. And then once you get across the top, this is indeed where you distribute from here, right? And ultimately, like, that is the defining action, I think, of a really important trend that you're going to pass over later. So I've got this marked off, and I'm thinking to myself, I could be a little off, and this thing could be way off. And if I pick the wrong points, it could be way higher, yada, yada, yada. The best thing for me to do is to try to validate this by finding other places that this makes sense. So then I'm looking backwards, and I'm like, okay, well, remember what I said earlier about how every top, in theory, every top should have a number of trajectories that are pointing down to that future bottom area. But some of them are going to point to like the ultimate low down here. They're not all going to point to this 4-year marker, okay? Well, I went back and I found another good one from around this area. I used, you can see right here, this line. And that one actually ends up pointing and crossing. I didn't do it like on purpose, all right? Although, yes, I'm obviously representing it like it matters. This is another really strong one. And I think that it's really, really close, again, as a contender, because it does establish during this breakdown here and during this recovery, it's a really strong trend down. That one meets up on the day, and it does also have some hits in this area. It's got like 1, 2, 3, 4, 5 hits in this area. It meets up on the exact same day, October 7th of this year, at the same price. So that's significant to me. Then I'm thinking to myself, well, remember what we said about upside. Upside should have the same kind of concept where you're able to take trajectories to the upside, and those should point at future upside targets. So I'm looking at this, and I'm looking at it mostly short term, and I'm looking at future upside targets as, okay, well, what do we have here that indicates there could be some support and resistances? You have bottoms and tops. You definitely have some places that you might find that, yeah, like this could be one, you know, way over here, like that could be one way up high. The next one up is this guy, and this is the one I find, again, to be very interesting because this one basically also pinpoints a similar region. So again, I'm locking into these bottom 2 points. It's pinpointing like a similar area around 820. Is that an inevitability? No, it's just that this uptrend were to continue bouncing along indefinitely, it would have eventually possibly hit this region. I mean, you can see the trend as a trend just chopping up. It's heading that direction. Same thing goes for here as well. Depending on which one you pick, and there's more than one wick here, the actual top first 2 wicks that appear right here on this top do point towards that exact same intersection. So that's the first 2 wicks, as you can see below here. They point towards a very similar, if not exactly the same intersection. So it's a kind of a convalescence of like ideas that I'm using. I don't know how much more precise I could be, right? But that's not exactly going to be the high. And that's the thing is like when I look back at previous, it's not even the high at all. In this case, we're talking about a bottom cycle. When I look back at previous bottom cycles, the most common thing that we're seeing is that there's actually a bottom beforehand, and then this is like a recovery. So if we're doing like the waveform, I would draw the wave, again, like here to here. You see that? And it's passing through this particular point at this particular time. It's basically like the perfect wave, right? I mean, it's pretty awesome. But that's not actually the bottom, right? There's actually a lower low, and there's other lows established later near the top. I mean, it's kind of crazy how, you know, of course it's got microwaves in it. So did you get what I'm saying? So like in the same sense, I'm not trying to identify necessarily the bottom. I'm identifying like a potential point where that's going to now define the next movement that's coming. So I wouldn't imagine, just again off the gate, I wouldn't imagine this has to go straight up there into October. I could see this easily coming back down to like 4 and then advancing again, maybe up to here and then dropping again or whatever. Okay. I could also see how, just like in some of the other examples, this could actually advance past here and then come back through it and really define the next 4 years. But my expectation is that on October 7th of this year, I think we're going to be in this pocket. And I'm going to keep this on the chart. As crazy as it might sound, I think I'm right. And I think what's going to happen is you're going to hit... This is a really silly thing to call out, I know. But I think from a technical standpoint, it makes sense to me as a waveform that this should pass through this marker at this date. I don't think it means that it's necessarily done bottoming, and I don't think that this necessarily means it's already going to be on the way out. As you can see previously, it's just the wave, right? From like one thing to the next. And where you draw that wave is going to drastically determine, you know, everything else, obviously, that follows. I went back though and I thought that's probably not enough, because even if I'm like really good, even if I'm really good at identifying the right trajectory every 4 years, I might have a really good idea, but you're not going to like pinpoint it. And maybe that doesn't really matter that much, right? But I should also be able to then use other evidences to kind of help me determine. So then what I did is I went backwards and I used like 4 other trajectories, okay? And I found that there's also a significant amount of convergence, we could say, around $25. And if you recall, this breakout of this Bulkowski pattern would lead you back up to at least 24. 25.34 on this particular stock is not like the moon. It's just a new high. You know, it would be like an SOS, like kind of like almost like a spring motion type SOS deal, perhaps. But in the grand scheme of things, it's not like the highest high ever. You know what I mean? It's not like I'm calling for like a moonshot here. It's very high, but it's a 4-year cycle. It would take a long time to get there. And I would imagine it would look something like this, you know? So what I did is I took I copied this trajectory and I used it from this point. And what I found is this red line is the one that's copied, I believe. So I used the exact same trajectory as the exit that we had in 2009. So I was assuming that like, all right, if we do this recovery, it's kind of like the 2009 drop. You had this massive slide. Where does this lead you? And it leads you back to, again, the same marker at 25.34, which just so happens to also have like 2 or 3 other trajectory points kind of pointing the way to the same place. I went and looked and I said, okay, that's fine. That's all well and good, but that doesn't really necessarily represent what I would think would happen. What I would think would happen normally is that we wouldn't come above this guy. So I'm testing my own theory here. I'm trying to find holes in it because I'm like, well, it's easy enough to say this is definitely going to happen. But then you want to see if you can poke holes by saying, well, does that set up for the future? Does that make sense if this is a bottom that comes back up? And where does it go to? Because it should play out roughly the same. And this is what I would expect. I wouldn't necessarily expect it to go beyond this unless it was going to break out. But this is definitely like that hook value. So if we're looking at the concept of ups and downs, and like we were just talking about it a few minutes ago, the waveform, this should indicate where that next wave is going. So thus far, this is fairly on point. Like it's not way off. Again, I'm not trying to say it has to be, I can't possibly measure that far out, you know, necessarily, until I have this one, which I think is a little easier to maybe guess because it's a lot closer. We have more information. This one, we have like no information on it. But if you look at except for the trajectories, but if you look at the trajectories here, they're all kind of pointing to the same pocket region, which just says all-time highs. Again, you're back to the top. So is it consistent then to say, yeah, this probably could happen? Yeah, I think so. And what's even like kind of cooler about a lot of these is these long-term ones, especially here in the middle, And we've talked about these like cat ears before. We've talked about how there seems to be a really big, important kind of pocket for every stock. When you have these cat ears, that middle tends to define a lot of things later. It's like the center of the ears tends to mark off portions of the waveform later. So maybe not surprisingly, but these two major trajectories, the ones I left the extensions on, they're also sort of indicating, and this is where it kind of got me. And I was like, well, this one indicates that you could potentially come way higher, you know, in the future, but not like infinitely higher, you know. This is just long term. Like you could have a waveform up and then another waveform up. You end up at like $50 or something if that's the trajectory. It's not like some ridiculous price target. For this particular stock, which is undervalued, I mean, it's a trust. Not exactly the same as just a security, stock security, but I looked at the downward cycle here, and this is where things get kind of like a bit crazy to me, is I'm looking at it and I'm like, well, I picked out this value in October of like 797 up to 820, and I'm looking at this previous one, again, that cat ear setup. This is the last known downward trajectory, and it's the same place. So in the grand scheme of things, what that tells me, potentially, it's like a lot of potential statements. It's like hypothesis, right? Is that this downward cycle, in order for it to continue into an upward cycle, has to test the previous bottom trajectory. And that makes too much sense to me, because when we work on, I know it's getting convoluted, I know it's confusing, but it makes a lot of sense to me, because when you think about waveforms and you think about like a downward motion, how do I describe this? Here, let me do it this way. So I don't want to use that. That's going to kind of be confusing. You'll see what I'm talking about when I draw it. It makes sense to me because there's an element in a waveform, and you see this a lot in trends, where if you have like an up and a down, right? We've talked about this before in the past. This downward motion, let's just call it that, and it doesn't even really matter what happened before here. I mean, there could be a number of things. But this downward motion gets tested no matter what you do, because if you're going to come back up, you're going to have to face either that level or an angle of that level. And one of the things I've been talking about with the waveforms is the 50% marker, which oftentimes is higher, but not always higher. And what we see is that ends up playing like a really critical role in a breakout at a later time. So in order to reverse, naturally, you're going to have to come back above support levels or resistance levels. That's a given. But this one that ends up playing a really significant role is directly related to what I would call like a 50% level. And then we see that sometimes during this setup, and this is what I was getting at with the cat ear, because we found recently that GME had a trajectory through a cat ear that was hit way later in the supposed random run-up from the GME crowd, and it intersected at a particular time. This basically gives you like a sense of, I know it's a little confusing, but it's kind of like, I guess I'm thinking about it in terms of like waveforms. Like if you have in terms of creeks, like if I have an arc here and it's providing like support, then like no matter what happens, I could tilt this up or I could tilt this down. Like it's going to define, and this eventually will break, and it does break. It's going to eventually define like a place that you're going to have to come back to later to recover. Does that make sense? So it's like no matter what you do, you could put this up like way high at a steep angle. It doesn't matter how you change it. I know I'm kind of using this as like a design for whatever, but it doesn't matter how you change it. If this sets up at like a really steep angle, later on, like when you come back through here, like it might be steeper, but you're going to have to like deal with the same creek. Like it's just going to be dealt with lower. So in some ways, even though these time cycles might seem a little bit bonkers, like tinfoil hat, in some ways, like it makes sense that all these markers are being established on a downward cycle, and that if we look at this as like a large waveform where this is like 1, 2, 3, 4, you know what I mean? And each of these is considered like a bottom, top. So it's top, bottom, top, bottom, top. Then in order to get from bottom to top, you're going to have to cross that creek. So I guess what I'm saying is I think, I can't really prove this. I don't have enough data just yet. But I think a previous bottom or a previous top cycle, depending on which one you're going into, is going to be a large defining factor of whether or not you can advance. So it makes sense for me then to consider this bottoming here and just, again, generally consider that and then think about how that relates to the next bottoming, because the next bottoming, in order to advance into a top, is going to have to pass through that same area. So like those end up becoming really critical. Let's just call them creek lines, because I don't know what else to call them, because they're not really trends. I mean, sort of, some of them kind of are. They're obviously like tops and bottoms, but like in this case, we're using these timed markers. So again, it kind of freaked me out a little bit because I was like, well, that's weird, because it's definitely not a coincidence if I've done this correctly. And again, I measured out even keel. I did the closing opening prices for each one and try to, you know, examine how they're moving. That essentially like every 4 years, you're selecting a trajectory. Every 201 weeks, you're selecting a trajectory to follow next, and it points to the exact intersect of the next 201 bars. That's kind of strange, right? You have to use context clues. It's not like they're just giving you the answer every single time, although some of these are ridiculously, like this one's ridiculously easy. I think that some of them are a little more obscure. Okay, so how does this relate to AMC? Well, at first I wasn't really sure that it would relate. I kind of thought to myself, this is probably not going to relate because AMC is a younger stock. It didn't exist back then, you know, all the way back to 2000 and whatever. So I went and I looked at the comparison, the direct comparison between MPW and AMC is really strange, because what it does is it syncs it up to like COVID, essentially. And then retroactively, it seems to suggest that they're the same length. Like, because this goes back to 2013, right? And MPW's chart also goes back pretty far, but it goes back a lot farther, right? So this goes all the way back to 2005. So you can't exactly make like a direct comparison between the two, but you can compare like the current time frame. So what I did is I just added, I think I took it off. I was just curious. I actually thought at first they're probably not even remotely the same, completely different industries, right? So I'm assuming like right out the gate something. I'm saying, well, I don't think they're the same. So I don't think they're going to end up matching at all, because one is real estate, the other is, unless it's just a market-wide event, right, where every 201 days, every one of the markets picking trajectories and yada, yada, yada. And so again, it's kind of like, it's best to kind of look at this from like COVID backwards and then COVID forwards. But this is the MPW chart, and I'm like, well, in some ways they're not the same at all, because there's certain things that happen. This reminds me a lot more of what happened with SPY. SPY was already continuing upward. AMC took a longer path. In other ways, they're really, really similar. There's kind of this like similar double top mechanism that's happening way back here, 2015. I go back to 2015. I'm like, yeah, this is probably what the market was doing on the whole. It was already in the middle of like a down wave. So AMC is kind of born in the midst of a down wave that's turning into an up wave. And the up wave is suggesting that roughly by November of 2020 or that time period, you should be on an upward move. AMC is not doing that. Clearly, it's going down. So this ends up being like a down wave, and then it looks like another down wave, right? Like, oh, well, that wasn't successful, was it? Again, bear with me for a second, okay? So I'm looking at these dates, and I'm like, okay, but are the dates significant, right? Because maybe it's opposite day or something. AMC is moving completely opposite, and that's the answer here. And it kind of is. So from January of 2017, this is January 23rd. This is when MPW is kind of finishing a downward wave and starting an upward wave. It's got the trajectory set really quickly. It's heading towards the November 2020, which ends up being kind of like a top, right? But of course, we know COVID happens. Very different, right, from what we see in AMC, because AMC is kind of heading down there that entire time. Well, there's January 23rd. So you don't need me to tell you that that's significant for AMC. Right? Like, you all see why that's significant for AMC. So if my first thought is maybe they're opposite day, right? So I don't know exactly what happened in January of... I know that in 2016 you have the election, right? But that's not the date I picked. I picked January. So clearly, again, very similar to like a 4-year election cycle, but not quite exactly the same. And it's also not exactly 4 years. It's 201 bars, right? So the first two here are absolutely like mind-boggling to me, because when you look at the same cycle that I found here on MPW, which goes from January 23rd of 2017 through November 30th of 2020. So it's the exact same cycle period. AMC almost perfectly moves. And again, it's that 4-year cycle we've talked about. I know it's an election years, so I get that. Don't hear me wrong. Okay, I understand it's the same. But again, I'm using these dates in a specific way because I'm assuming that something about that 201-day period might be important. So I have to test the hypothesis, right? It's essentially the full length of the down wave, right, for AMC. Now, here's where things get kind of spicy, because this is supposed to be, quote unquote, supposed to be an upward wave. On MPW, this was actually the down in February. So I know I didn't kind of label it like that. There is no early wave. This doesn't go back far enough. So this doesn't go back far enough for the up wave. This was supposed to be like the bottom, quote unquote. Now we know that even though stocks can move with the flow of the market, that sometimes they don't. They move completely opposite. It might not be a bullish stock. It might be a bearish stock in a bullish market, and therefore it's moving the opposite direction. But what's interesting about this is that during this quote-unquote inversion, you're still getting those trajectories that are pointing. And when you get to that midway point, this is the area I've often talked about as being like super critical for AMC. It's kind of like right here, right around 2018, right? It's the 2-year cycle. This is the point where you start getting some really fascinating trends that later are going to be met way, way later, on the next top. Okay. So at first I'm thinking to myself, what you're probably thinking is like, well, it's just inverted, right? So then can you tell, why don't you just flip them around? That's top, that's bottom. Well, I don't think it's that simple. I actually think that it's correct. And I think that when you look at the waveforms as up and down and up, it says, I know it's confusing because it doesn't look that way. But if you look at the waveforms in that manner, even though it's kind of, frankly, it's backwards for AMC, it looks almost backwards. It's not that far off, and you can see that it almost looks like a correction. Like you're going the wrong way, and then all of a sudden you correct. And I've talked about this before with the COVID recovery in AMC, because it does seem to me that there's this kind of massive correction. Like you're going from a very bearish to a very bullish move very quickly. one of the things that was hard for me to identify with AMC has been the sine waves, because they don't seem regular. Like, they don't seem to happen in regular intervals. When I started looking at this kind of apparent 201 week cycle that seems really easy to follow here, like, historically speaking, I mean, I've got years here. This is not like a short amount of time. So some of you are going to look at this and say, that's not enough. I don't know what to tell you other than that's 20 years of data. So if 20 years of data indicates that you could end up with an upward cycle for the next 4 years, I think that's a pretty decent amount of data. I don't think it has to be perfect in order for most people to agree that, yeah, this is probably a decent place to buy and expect an upward cycle for the next 4 years. It's a long-term investment. It's not a short-term thing. AMC looks like it's completely backwards, right? Because it doesn't look like it's doing quite the right thing. It looks like it goes the opposite direction, almost perfectly the opposite direction, except for this. So this is where things get kind of interesting. So if you look at the GameStop and AMC squeeze, I've talked about this enough. I don't think at this point I want to like rehash the same thing over and over again. But if you recall, SPY didn't make its big highs until near January of 2022. And I always thought that AMC was like, somehow it was like ahead, like it was moving far faster or something, because it was behind. So you have this concept of like waveform on SPY, and it's like, oh, it's down, and then maybe AMC is like whipping around this wave with these really volatile moves, and it's a corrective move. I think that's correct. I think it is a corrective move. I think looking at it that way, like I have in the past, probably is fine. Like, I think you're probably okay. You're going to find that, yeah, it looks like it's a pretty even keel whip around what seems to be the SPY trend here. But SPY ultimately didn't make its high until we were kind of breaking down. It was January, right? Way back over here. Why is that significant? I just drew the line out. I kind of deleted it, but it's significant because remember that halfway mark? That's where it meets. Like, so that was that cycle we were talking about. Remember how like you get to the halfway point, and I was talking about a minute ago, that halfway point often is like it's kind of like a breakdown level, right? From where you're going. It's not always 50%, but it always interacts with those trajectories. And that's the 2-year cycle, right? And then every other year you can see like the down has to meet the down. So in this case, it's kind of strange, and I'm still not quite done with this yet, but I started working on that assumption that like, okay, well, maybe that's it. Maybe the goal was not, this just happened to be like this really high move because of trajectories from way earlier in the stock, and it's doing this weird correction where it's correcting to a really bullish version of this stock, right? But ultimately, like, this could indicate where it was intentionally drawn to. Right, so this is like kind of the high. I know it's like a little confusing, but this is like where the high would have been if it hadn't had this odd. I know it's strange. I'm like speaking out of order here, but I hope this makes some sense. Like the fact that it ended up on that midterm trajectory at the time that SPY is hitting its high makes me think that's probably the corrective value. Like, and everything else was just like to get it in line. So like the idea is like it was intentionally trying to get it back into the downward cycle. So like this would have been the peak, and everything else is like corrective. And that makes sense if you look at the market on the whole. And then it also makes sense because it's literally established in the previous downward motion that is a potential support and resistance that would need to be checked in order to invert the stock had you gone up high and then came back down, which is what happened, but it happened a little late. Confusing? Yeah. Okay, good. I know, guys and gals. I understand. You're like, this is stupid, Booksy. When are you just going to give me the answers? Well, this led me to start thinking a lot about the potential that we're not inverted anymore. So I started looking at this as, first of all, I looked at it a lot like a linear chart, which is kind of what this looks like. It's like a linear chart. And I was like, well, on a linear chart, there's no easy way to draw like that downward cycle. Like it doesn't seem to exist very easily. MPW has that thing. I just did it. I'll show you here. I just did it, right? So it looks like it has like a really clean, you know, cycling here where you can kind of see like, oh, it's moving up on these paths and yada, yada, yada. Well, downward cycles would be like that. It would make sense that they would be downward and then back up. Upward cycle should be the inverse, right? You should see an upward motion and back down. So you'd have like an inverted parabola, whatever you want to call it, bowl, hat. So my question is, did AMC do that? Did it have like the downward bowl? Well, it did. And for a long time, I've been kind of scratching my head about what I feel is like a really hard to read chart, which is that linear chart. Because the linear chart has no trends that haven't been broken. I mean, they pretty much all have been broken up until the last one that happened in May. Because there's essentially like a flattening parabola. I mean, it doesn't really have trajectory straight down. But when you look at if you look at the downward cycle in relationship to where it broke down, which is right here in November, here, suddenly it's like, oh, like I see, like if that's the peak pinnacle point, you know, it's a little confusing for sure. But then this ends up being like the downward cycle. It makes perfect sense because the RSI is coming back down in what seems to be a very simple to read narrowing, right? And unlike the price action, which seems to be this bizarre upside down beak flattening parabola thing, RSI doesn't really do that. It kind of just maintains like a pretty steady wedge, frankly. It looks fairly consistent. And when you get to the bottom here, the points that matter aren't really the points I would think matter. I would think the points that matter would have been like these tops, and some of them kind of do. But I noticed that when I was doing this, I was like, well, those are the August fractals. Like that's like the fractals from August on August. And I was looking at the greater picture and just kind of identifying things that I know already and identifying back to that May break. And we were talking about this earlier. There could be a downward move that technically goes back down to like 3. But if this holds here, much like what we saw on this cycle, which was supposed to be an upward cycle, I would argue if this were a bullish stock, this should have been an upward cycle with the rest of the market, was very, very, very low. This also has that divergent RSI after that initial bottom. It does come lower, but it does never make a lower RSI, and that's where ultimately like the big turn happens. And in reverse, I know this is a little out there. Hear me out. In reverse, you have a very similar kind of motion right here, where you have this kind of drop across, right? So you're jumping over like the downward creek. So this is like, I know this is like simple in that, okay, Booksy, well, if you identify pivot points, obviously the RSI is going to pivot on those pivot points. So it's kind of like you're just biased and you're just saying what we already know. You're just saying that this somehow supports this other theory that you just kind of found on this random REIT stock and blah, 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 blah. That's not really the case. I actually don't think AMC fits it like a glove, and I think that's kind of a good thing. I think there's moments here of like clear like difference. So like you have the same kind of thing happening on MPW with COVID where you have a drop, and something like this also happens on SPY. SPY is like really bullish afterwards and it still continues up to all-time highs. So regardless if you're looking at SPY or if you're looking at AMC or you're looking at MPW, no one would argue that the date that I picked out, which was like November 30th, 2020, is somehow like the high. It's not. But in a waveform, that it is establishing itself as like an anchor. Ultimately, it goes beyond it, right? And so the pivot, I would say, is actually back here. And everything else is like superfluous, basically. It's like extra, if that makes sense. So the question then is like, well, then how does that work with AMC? Because clearly AMC had a lot of extra, if that's the case. And I say, yeah. And it doesn't quite make perfect sense yet. But I would say that the upward cycles, I started looking at this big picture and I started looking at this like as if it were brand new. I said, all right, let me forget what I already kind of thought about this, because I do this all the time where I think of an idea and then I have to like go back and like look at it all again. I switched off of logarithmic view, which is something I don't do very often because I don't like the linear chart. But one thing that did stand out to me, and I know I've got all kinds of markers on here, all kinds of lines going down, and it's going to be a little bit confusing to try to like explain this at first. I get it. But essentially, like, I guess what I'm trying to say is like there's a, on the linear chart, if you draw a marker, so I was like, all right, let me just do the exact same thing. I'm going to get rid of this crap. If I do the exact same thing that I did on MPW, do I come up with a similar answer? Do I get those trajectories? That's kind of where I was. All right, do I get those trajectories? Because you clearly have what seems to be a big wedge here. This wedge has a massive breakout target, goes way beyond what you would expect for that wedge. Most wedge breakout targets are like 618 retraces, which is a lot more similar to hint, hint, nudge, nudge here where it is in January. It's not quite the same, and it still drops way low, but that would have been a more accurate breakout for like a triangle like this. So the correction may have already been in place, you know, before the whole GME thing, because there's definitely a wedging action. There's definitely a break. No one would argue, I don't think you could argue that from a technical standpoint, that this wasn't an anticipated move. I just don't think you can do that. I don't see how you possibly could. Like, as soon as it pushed down in November, it was pretty much guaranteed to run. I mean, I don't know what else to say. Like, I know there's this argument that somehow, you know, retail stepped in and they changed the narrative. Yes, I do think it was going the opposite way of the market, but no, I don't think the narrative was to bring it all the way down right now. I think it was probably more or less to get like a retracement on this value. And more accurately, I would say it probably was to get to this like 17, or excuse me, this level here, which is kind of like the center range. So you see that like red area I marked off? And that would have been like more of like a 618 retracement right here. Why is this doing like percentages? I think because I had the other thing on. Here we go. So I don't think the goal was, and really I drew this wrong. It should be here. So I don't think the goal was completely and totally erased. I think the goal was that AMC was going to do a 618 retrace regardless. I don't think the anticipation wasn't to bring it up probably this high, although it did adapt to previous trends. I think the 618 retrace is right there. It's like right where it dropped off, and this was around December 30th going into like January 9th of 2022. This is when we like left the cliff. That was corrective, like it had already corrected, you know? So if you look at the maximum and you look back here and you look at this, where is it going, right? Like all signs kind of indicate early on, this is way before like apes get into this play, right? All signs would have indicated that you needed to then jump over this guy, and that's what happened. We got this massive extension. But I think it's pretty self-evident that that was probably the target, because this is a falling wedge. A 618 retrace would have gotten you right there into the center of liquidity. You wouldn't have made a new high, but you would have come up here. And the timing of it in that regard, even though it looks kind of backwards from what we see on like MPW, for example, the timing of it's not actually that off. It's slightly off, right? And then the rest of the action as it follows through actually looks pretty much identical to what we see here. It's got the same ups and downs as the rest of the market during this downward phase. So from the peak, you know, both of them have the same thing, which is they both actually come up higher after that quote-unquote upward motion. AMC is clearly like way down, right? So it definitely looks different. But they both end up pushing up higher, and so does the SPY. So it doesn't like erase anything. It just tells me like, well, maybe I should still use the exact same information about this region that was around December of 2020 to define where we would expect ourselves to be in 2024. And then as you move forward, then things get kind of crazy because it depends on whether you're using logarithmic or linear charts, right? But I went through the motions and I was looking at, well, where do we expect this to go? And there's a lot of things we could talk about here. This could end up becoming like a whole day's worth of, and I haven't finished it. And this is why I wasn't sure I really wanted to talk about it very much. This could be a whole day's worth of analysis, frankly. And I did this for like an hour. So it looks like I did a lot, I know, but I did it for about an hour. And what I sort of came to a conclusion is that there's a target around like 3680, and it represents this previous floor from like the drop in, right? And I think it's reasonable to say that it's possible that by October you could be at like 3680, which before this time, guys, I've not been very bullish like that. I don't really feel like you could get there in that time. But based on the way we see these corrective waves going with AMC, I don't think it's impossible. And I also think that would allow you like a greater retest on the weekly. So what I'm not saying is you can't experience more downside in the meantime, because frankly, this could go down all the way until August and have like a corrective move and then rip to the top. So just because I drew like a straight line does not mean it has to go in a straight line. I'm assuming that what I did reset kind of the view, and then I'm now using like a different methodology. So what I did is I took the measurement, okay, during that cycle, and I applied it forward. And as you can tell, when you use that same measurement applied forward, you guys are like, I can't see jack dilly squat in your chart book, so you're just talking and I'm just listening. I applied the same parallel structure, assuming that it's kind of inverting a little bit, or it's going to follow a similar pattern. It did. And this is not exclusive to this thought pattern. Like, this whole idea is not exclusive to like just this idea of like cycles. But if it's following in line with it, then I want to pay attention to it. So that's why I'm doing it. So what I did is I applied, going back to December of 2021, that bottom and that top, right? I applied the same downward cycle pressure. So I use the same angle of descent. Those are the angles that it's matching right now. So I know it's hard to see it because I'm making a lot of statements, saying a lot of things. My voice is dying. I'm saying a lot of things that feel like nothing, but they're like, it's a cumulative thing. So you're kind of looking at this like, oh, it's not designed to be like the end all be all. But this particular motion right here, these three parallels going down, and there's another one way up high. We can get to that one later. Those represent kind of like what we're seeing right now on the micro. Is you see this kind of push up, right? And then you're sliding back down through these parallels. If you can advance through the parallel, you can see that what's happened previously is that we've made massive moves through them, okay? And this doesn't just apply to the current time frame, it applies to every time like we've jumped these, but specifically these two ones. This guy right up here, the top one that I've drawn, which kind of goes through the August top, and then it also goes through that top in December of 2021. That one's not quite as important. I think it's like an extension target, but the ones that are on the very bottom represent like the real creek. So if I were looking at this only from the point of view of a linear chartist, like I didn't want to chart it any other way, I would argue that those are the two big creeks. Like this is the one we broke out of in 2020. This is the one that we were currently needing to break out of now. And the motion by which we've gone through these is actually almost identical. Because in both cases, we started high, remember, if you hadn't, let's say in theory, if you hadn't made the advancement that you did, you would say, like, example here. Remember I said that I think this is the corrective measure because that's like the 618 retrace. So if we hadn't made that massive move and we had only like pushed up to here, the rest of this would probably look like the exact same move to us that we already experienced. It would just be happening lower. It's like an offset of the same thing. Do you see that? I don't know if you can see that well, and I don't know if I can explain it any better. But basically, I think it's like a reset button, and this does go down lower, but it's because it's supposed to be lower. Like the stock was basically they're trying to put it back on track to what I perceive as like an earlier target that was clearly achieved, but only as it came into sync with the down cycle as it was beginning after. So like everything from June of 2021 to January of 2022, there's like a 6-month window. That whole period to me looks like it's a corrective measure to get you back and get you ready for the down cycle again and get you at the appropriate level to start the down cycle, which is just like a rinse repeat of a previous pattern. So this is like the previous top. This is like a 60% reduction of that previous top. That kind of I know it's not like, from a technical standpoint, it's not really the most accurate thing to do because it is what it is. Like it broke up, it went to a new all-time high. That's it. But part of the reason that this chart's been so frustrating is that really up until it broke to new lows, and this didn't happen until 2023. I mean, it didn't happen until August of last year. It was technically possible that this was still in an uptrend because it had made a higher high and it hadn't yet made a lower low. So what's been really frustrating about this as a chart is that it hasn't really given me any indication at any time that it was definitely going to make a new low. There were moments of like, well, I think it's going to go really low, but that was relative to the previous price. So when I said $2.50 and $3 way back here in January or whatever of 2023, it was relative to that current time frame. I wasn't thinking like, oh, it was going to have this massive corrective move and all this jazz, right? So when you look at it from that point of view, it kind of changes the dynamic of this quite a bit. And what I did is I went through and I looked at similar trajectories, similar paths. There's a lot, and they're really high. And I started observing things just like we did here, where you have like, oh, there's a probability that you hit this marker, but it did pass through it and then come back down. You know, obviously, those are things you want to pay attention to in the market. There are parallels here that are also doing something really similar. And I guess at the end of the day, what it kind of came down to was like, there's a lot of potential here for some massive, massive, massive upside if the corrective measure isn't, I don't want to say it isn't not, like, how do you describe it? If it's not like, if it didn't really correct it, if that makes sense. So if the issue was we're using this as a distribution method above like a 618 retracement, and that was the way we were correcting it, we were able to get enough people out of the stock. The rinse repeat of this should be very similar, right, in nature, though it may not go as high. I think that there's a very strong chance, again, and I'm not quite done with this yet, that this downward cycle is still going to play into an up cycle, just like we see on like MPW and SPY, and not be like an inverted version of it. Because I think the correction itself, even though it doesn't make sense that call this a down and this an up, it looks completely backwards. I get it.
I think that the cycle correction has already happened, because once it got up here, it's been assuming the exact same motif, but now it's doing it again, but this time into the correct bottom. So instead of it going into what should be like a, I know it sounds confusing, but instead of going into like what should be a top and then having some massive correction, it's going into what should be a bottom, like the rest of the market. And I think that's a really positive sign. I went through and looked at some more of this stuff that I wanted to see, like, well, what did we see during MPW's down cycle and SPY's down cycle? Like, what was happening there that was establishing those trends and targets? And I started piecing it out on AMC, and I basically got burned out and just kind of quit. So I wasn't really 100% prepared to talk about this, and I was kind of hesitant to do it anyways because I figured a lot of people would kind of zone out, but it's a lot. I know it's a lot to digest. But what I did is I basically took a 618 retracement of the whole move. A 618 retracement of the whole move is stupid high. It's like 245. Okay? It seems like way too high to me. But I know that people are going to look at that and say, well, if it's a wedge, you can't really, like, if it's the same thing as we saw before, you can't really fake it, right? It's still going to be a 618 retracement. Well, maybe, you know. But it wouldn't say that you're going to get there like now. It would be like, again, during the next upcycle. And that's where things get kind of hairy. It's kind of like, well, what about timing, you know? I worked it out, and I think I did a pretty good job of working it out, and it's not going to be what you want to hear. But basically, the 245 seem more likely to happen over another 4-year cycle. Because technically, when you look at the way this is built out, with these up and down cycles, that particular motif that I'm using, that I'm relating to the market at large, is a long-term cycle. This is not short-term. And there's no other way to say it except that, yes, you might start an advancement here early going into October of this year. There's no guarantee that it happens the same on every stock. But at least for here, I think, and for SPY, the advancements have been happening earlier, and sometimes if you're just flat out in an uptrend, it's just a downward motion within that uptrend, like it was in this case. It didn't break the trend, didn't like have a massive trend reversal here on a down cycle. It just had that upward move, right, begin from a low within the trend around this period of time. And sometimes, yeah, you hit the low early, you're already advancing. So it's possible that going into October this year, maybe even probable, we'll say, that it's already kind of set up to advance. We don't hit another low. For example, on something like MPW, we may not. We may come down a little bit lower to the 4s. But then I think long term, you're looking at way out here. I really do. And I think it makes sense. You know, there's a lot of other things going into it. That's a multi-year, very, very big move, right? At the end of the day, that's like 750%. It's not like some crazy AMC move, right? But it is really, really high. And so it makes sense to me that it could take 4 years and you'd be on another upswing. And point in case is if you look at the previous upswing cycle, again, it looks like it's happening really fast because you're looking at a weekly chart, but really this is a long period of time. Again, it's 201 bars. So a 201 bar cycle is quite a bit of time. 201 weeks is not a small amount of time. And there is another sense of, like, interestingly here, if you go from like 50 to 50, this blows my mind because, again, it's like, well, it's not even from the bottom. It's from these anchor points. When you look at where these anchor points are, this 50-50 is like along those anchor points. It's not from bottom to top. It's very strange. So again, it's almost like these hyperbolic moves that are going past these markers, they're not really that important. They're kind of just like extra, and that the markers themselves tend to be the more solidified move. And I don't know if that's true about every single stock, but so that would tell me is that if, for example, let's say you did end up at $7.97 or $8 in October, and you're on MPW. I mean, technically, there's nothing saying it can't go back down, but I might expect, and that just happens to be almost exactly the same measurement here, but I might expect the 50% to then be somewhere around 1431. And that gives me a sense of like, does that make sense, right? We can go back and look and we can say, does that make sense that that would be where you might find a support? And the answer is, yeah, I think so. Because if you look back, this is kind of the last point of support right here. It's like right where it needs to be. So it's mathematically, it's like really tight. That's where the last known support needed to be before it finally dropped and lost that uptrend. So it's kind of fascinating. So like the setups themselves, they don't necessarily respect the ultimate lows. So for AMC, it's a tricky one because when I looked at it, I was like, well, this is where things get really dicey because when you look at a linear chart, it's kind of messed up. It's really messed up looking. You have to like zoom in really far to even see where that bottom might be. I think, based on what we've seen, that this is indeed like the creek jump. I don't think it necessarily means you can't come down again. And I also think that could be really dangerous because obviously you've got, if this is it and that's all the upside you're going to expect, then you got, nowhere to go. I mean, there's nowhere to drop to except for like zero here, right, in the case of bankruptcy. So at some point, you're going to kind of like run into a wall of like, all right, well, you can't just go down forever, Booksy. No, you can't. But I will say this is like when you're starting to look at those outward build outs, just like we did back here in this bottom, they should be very valid for coming up with price targets. And I did find that there were some intersections that seemed more likely than others. One of which was like that $14 intersection. We've already talked about that one. That's happened multiple times. So like that one's kind of like whatever, At this point, it's redundant. We've already kind of fleshed that one out, so I don't really want to get into that anymore. But it did come up again. There was another intersection that was a lot higher this time, and I looked at it again from a big picture standpoint of where I think those creeks might be, and that's way up here at 36. And that would be in the case of like a major like macro advancement. And some of this also makes me think that if we were to pass back above, so the fact that we wicked above this area reminds me a lot of the previous wicks that we had here. So it started, there was 1, 2, 3, 4 wicks that happened. Yeah. And they all happened during that silly ape era. But that's kind of like where I would define like that bottom motion. Like that's where the creek is. Remember we were just talking about that? The same thing kind of happened here, right? There was 4 presses up. They kind of weaken as they go. And as it's going, you can see that technically like this jumped over those pretty early, some of those early ones. You can see it kind of came past. We didn't really hit the bottom until it came back down. And this is why I'm wondering about the current advancement. It might seem like it's some kind of January copy, but it's possible that we're really experiencing something that's a lot more akin to like September of 2020. We're seeing like that early push, and we're not quite there yet. We're going to see a deeper retracement before we go forward. That's kind of where a lot of these folks are talking about like 190 or whatever. So I can see that. I can see that much more clearly on this chart because again, with the linear chart, it's a lot more hyperbolic. Everything looks crazy high because of the scaling. And that's fine. But the other thing I wanted to note is that if you were to advance past that marker, it seems like there's a pretty strong chance that you're going to like straight shot up really far. And the most obvious kind of target here is like this $60 mark. And you remember how we were talking about the, we've been talking about this quite a bit on this, but you remember we were talking about this like cross trend here? Look at the cross trend as it lines up to October 7th, back through the bottom here on December 22nd. And then look at where it lands. It lands on the previous all-time low. Now, I know I've done this before, and I've made a case that we're going to come up and hit this. But I never made a case that it had to happen at a particular time. I thought maybe around elections, And I know October, November, it's not that different. You're like, who cares? It's probably the same thing anyways. Yeah, but if we were to advance beyond this creek right here, this particular guy, right now, I think you could make a pretty strong case that this could basically beeline it to near $60 by October. Because the intersection there is not... just look at the chart. How else do I describe it? It's like a creek jump. It's kind of reminding me what happened here in January, where you had this massive push up and then it reaccumulates or it doesn't. Well, we've had the same kind of up thrusts above this particularly low creek right here, right? And then if you were to continue to try to do that again, it may not happen right now, right? And again, this could be one of those things where it's like, well, look, man, just because it lines up with this date that you picked out doesn't mean it's going to happen. No, it doesn't. But remember, when we're talking about MPW, we're not talking about it like terminating there and stopping. We're saying that it could even technically go beyond this and come back down to it and then perhaps find footing and then continue. But this is essentially like a marker for that waveform. Does that make sense? So everything else is sort of like corrective. It's not superfluous. It matters. It will establish trends. It's not that it's not important, but it's that if you look at the waveform itself, like that's the wave where the waveform and as a corrective measure will be. Like this is all like extra innings, you know, like extra stuff. I don't know how else to describe that. I guess that's probably enough. So if you were doing the same thing on AMC, you would put that marker, and I'm going to kind of get rid of this blue line because it's just more stuff to look at. You would put those markers here. So what have I learned from this? What's the takeaway, dude? Tell me about the current price action. Are we going up or are we going down? So what I've learned is that I think everything above that January area, I don't think it's as critical as we maybe expected it to be. I don't think it's necessarily not critical, but I don't actually think the waveform goes up there. I know it sounds a little weird, but I've got a pretty strong inclination that the waveforms are not quite that dramatic, and that we're seeing like what we're seeing in these extensions is we're seeing like these like hyperbolic pushes away from the waveform that you could see very quickly correct. This is way more bullish than I've ever been because generally speaking, I've kind of assumed that those creeks were probably the end all be all and they're established in this top, and I didn't see us breaking those creeks within the next couple of years. That doesn't mean that we don't see something similar to that on, for example, like this is a linear chart. Well, we may see that if I switch it over that it doesn't quite add up on the logarithmic chart. And you're right, it doesn't quite add up on the logarithmic chart. A lot of these values look really different because all these lines will shift. But what it does tell me is that it's possible, it may even be likely that your upcycle is going to then move not according to necessarily all of these moves, but just this last bit here, right? And where is it established? And it's actually pretty high. So I found some pretty good, one of them made me kind of chuckle, and it's interesting too because that reset point, as I describe it, now that the reverse split has happened, and you guys are going to be like rolling your eyes at me, but I have a weird feeling they did this on purpose. Remember the 145 strike? The 145 strike, do y'all remember that? Because I remember that. I remember the 145 was probably one of the most talked about strikes when we were way up here in the top. And after doing this analysis, I'm looking back and I'm like, wait a minute, the 145 is the break target. It's like basically it's your 618 target from this breakdown, but only after a 10-to-1 split. It seems impossible, reverse split. It seems impossible that you could have known that was going to happen. But it kind of makes me chuckle because I'm like, I wonder, I wonder if that was some kind of like a signpost to some institutions out there. I don't know how that's even possible. It doesn't seem likely, but the 145 is oddly like, it's a really significant marker now. And I just find that to be almost humorous, maybe not in the best possible way. I went and I looked, and that 145, it is the next. Again, I'm doing a lot here. I know that it looks like kind of a mess. And if you want, we can ignore some of this stuff. This is me just thinking long term of like a giant bottom, like an M cross, what maybe I would expect. But the 145 is strangely on this same arc here, and it's like the next down cycle intersects the current trajectory out. So you remember I was saying like every other down cycle might have an indicator of like where the next down cycle should somewhat start, and like because you'd have to break that in order to advance. That one indicates that 145 in like 2032, which is insane. I know you guys are like, that's way too far away, Booksy. That ain't gonna work. Well, all I'm saying is it's clearly being targeted long term as a potential place to sort of camp the stock. And it would not surprise me at all to see this kind of advance down to a point where you're basically coming into this. This ends up being your next low point years and years down the road. And a lot of people have talked about this Tesla-like squeeze. I don't think it's out of the question. I know it's confusing because I'm giving you like a million different targets. I haven't really given you one that's like way, way high, other than like the 244. And I mentioned earlier there was another target that's like really, really high, and I haven't really talked about that. Basically, I identified like I can't do it right now because it's not on the right scaling, but I identified a target that was like 1,500 or something ridiculous. And that had more to do with certain angles on here. I don't think it's necessarily like what's going to happen. But if you look at the ups and down cycles and you look at them as kind of hyperbolic moves, and they're really all bouncing between these pocket regions, then what you would say is basically you're generating like a waveform around roughly like the original opening of the price, which may not seem like super interesting. Like it might be like, well, okay, so you're just saying that it's basically flat. Yeah, kind of. Except that once it assumes a trend, you'll have a lot more information. And right now we have this idea that we might be entering like a giant bottoming period. And I'm looking at this like long term, like these are massive moves, y'all. These are not like small moves at all. And I'm looking at this long term, like, well, what if it gets over this? And what if it gets over that? Blah, 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 blah. What if it doesn't? What if this? What if that? I'm not quite there yet. I told you all earlier. If you're looking for me to give you like the bulletproof answer, I don't really have it, but I'm working on it. And I think what's interesting is like if this is a down cycle and we're going to correct back to like 54, it seems like a big stretch, I know. But if we're going to correct to 54 on a down cycle, we might be in a really positive place to make higher advancements. And it just depends on what we see after that. But I think it's possible. I think it's very possible. I went and I looked at this on Logarithmic, and it screws up everything, of course. You know, all these lines look like completely wonky, completely off. But check this out. Check this out. So you remember that line that we drew? The only one you really need to look at. So I remember how I said that the two cycles, and I picked out those two dates, and I was like, maybe they're important. And on the linear chart, they look like the creek. Yeah? All right. Remember right here, we're talking about December 2016, 2017 to that bottom. And I was saying like it's kind of backwards, but that should have been like the creek. Look what happens when you click the logarithmic and you look at it from a logarithmic standpoint. Look at where the bottom is. I mean, huh? You guys are like, I don't really care, Buxy. We already knew that. You thought that's kind of where the bottom was going to be. Yeah, but this is pretty significant because it means that it could be, again, that this is, again, indicative of where we might expect to be in the future. You got to keep in mind, like, I'm looking at this logarithmically. So I drew this out logarithmically, and then I kind of did a weird backwards way of doing it by doing it in a linear chart on AMC. And then notice the marker here going back to that same point in November of 2020. And look at where it ends up being. Again, it's like the same kind of concept. You look at that on October 7th, the same price. It's not, nothing here is like drastically different, right? It's still around like 56 bucks in October. But notice like how that changes when you look at like the big picture. You're kind of like, oh, well, it looks kind of different, right? Notice what that looks like here. It's like the 50% cross, right? But from a higher standpoint, I think it's pretty wild. So I think logarithmically, it's kind of lining up to make sense to me. I think it's a huge move. And some of you think that that's not a big move or that's not big enough. I don't know what to tell you. Because if you went from 234 up to the high here, that's like a 2,000% move. Long term, going up from here, this is humongous. So a full 618 retrace, that's like over 10,000. It's over 9,000. It's a huge move. It's huge. And then additionally, like looking forward, there's some really ridiculous targets. But I would say like this 244, 618 seems like even a big of a stretch. 145 doesn't seem that unreasonable to me. And the more I look at it, the more I'm like, I don't know, man. That 145 seems like it might be the right one. Because it's sort of like resetting it back to where we were in December of 2021. I find that to be very appealing to me. I'm not sure why. Makes sense? You guys are like, nope. You just talk for like 2 hours and I don't get any of it. Here's what I'm doing, okay? And I'm not going to quit it just yet. I'm almost there. I feel like I got to the edge and just didn't take the full leap. What I want to do is I want to kind of do the same thing that I did for MPW. I think it's hard to do on AMC because of some of the stuff I talked about. There's some of this is kind of like backwards land, right? Some of it doesn't necessarily make perfect sense. But what we should be able to do is we should be able to use those alternating cycles to help pinpoint. This is why I was feeling really bullish, because when you go to like the mid cycle, it's kind of in the middle of a cat ear, and that made me think a lot about GME. And I was like, man, GME was also had one of those things, and it was also kind of in the middle, and it pointed to like a future high, and it was really high, you know. This also is kind of in the center mark right here, and it's really far up. But it cuts right through. So that 244, which is a 618 retracement, it doesn't seem like it because the chart looks so wonky right now because of the logarithmic. It is a very, 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 very big retracement. That move gets you all the way back up to this place that we broke down in 2021. And if you go from the bottom up to the October 7th, 244, which is super high, if you do that, it cuts right through that middle. I know it's not an inevitability, but it makes me really wonder because it cuts right through the center mark. And that doesn't ring untrue. Like the cat ear from the bottom through the next like cat ear tends to be a pretty accurate possible target. Not always, you know, but it's there. So I've been looking at a lot of these and I'm kind of like observing. I haven't really finished yet. But that's one that really catches my eye. And I think 244 is like really high. And I would not normally say that we would go that far. I don't know if the reverse split kind of stuff matters in that regard. It might. There's other places here like the lower end. If you look at the 145, that one also kind of gives a similar vibe. Like it's also tested. So these trajectories are not in my brain. They've definitely been at play. You can see them being, as fib fans go, you can see them being tested and they're intersecting at a specific point of interest, like a really important point of interest in October. So you could always say, well, yeah, who cares? But that's just some random date. Like you move this down the timeline, they're going to intersect over here and over here. Yeah, but over here, this intersects at 205. Like it doesn't make any sense, right? And the fact is I didn't use this October 7th. I knew that there was of course I knew that there was the November election. That's a given. So the 4-year cycle thing. But the October 7th thing came from this bizarre like 201 week pattern. And I'm looking at it like maybe it's doing the same thing on AMC. And we're going to see that the upswing is already technically starting, but there should be a way to identify. I mean, that's really high to me. I mean, that'd be almost like too high, but could you imagine? That'd be pretty wild. GME is a little different, and I haven't done GME yet, but on the big picture, GME's only target that I found on GME was the $85 target. And interestingly, it kind of got there in extended hours. The wedge breakout is like a 618 retracement, and it sort of got it already. So for GME, in order for it to continue, it needs to have like a reaccumulation and then push forward. I haven't done the same kind of thing yet for GME. But I'll tell you right now, and I'm not trying to like I'm not trying to use language just to kind of get viewers or, anything like that. I just really genuinely believe that this is very significant. So I'm of the opinion that these dates and the trajectories set up around these dates really, really matter. And I think that they're predictive, potentially, like highly predictive of future movement. And the positive of all this is that the expectation would be, even though it doesn't seem like it, the expectation of this would be that you're potentially you're starting an upwave in the market. Now, historically, has AMC followed the upwave? Not really, but it did seem to correct, and it does seem to be following now. So if the rest of it follows through, I think there's a strong possibility that the corrective wave here could be massive, and at the end of the day, like some of these targets are super similar to targets that we've already gotten in the past. So it's not like it has to go to the maximum, but some of them are really, really high, like they're ridiculous. And if you look at it like it's a waveform that's kind of correcting, and these are like hyperbolic moves, there might be a way for me to do like slingshot method with it, and I haven't tried that yet, but I bet it exists. I'm not really sure what it would look like just yet, but I'm willing to bet that it exists. You guys are like, what? Well, the slingshot concepts are basically that you have a yeah, see, there's another one right here too. This is interesting to me as well, because this particular creek that I got, remember I was talking about this earlier, this particular creek that I got, the low that I marked off. So when we were looking at this on a linear chart, this looked different. That creek that I marked off here actually intersects right at like $20. And we've talked about that before as well, because this is like the same idea of like going down and pushing out above. It's weird because on the linear chart, it looks like we already pushed over this. Does that make sense? So if you look at this line right here, that looks like a creek right there. Like, remember I was talking about we might go to $20 or whatever, because that would be back to the creek. That's the same line that if you change it to the linear chart, that we've already kind of like poked above. And then if you look at the next marker up, it's actually significantly higher. It's actually up here at like 54. So it's interesting because it looks to me like if you were looking at this on the linear scale and you were defining that creek, this to me looks like you just kind of pushed above and then failed. But if we moved from here to 20, right, roughly 22 or whatever, and I know that says October, so you're like, well, wait a minute, does that mean it's going to be flat until October? Well, I drew it out. I forgot about this. You guys are like, what? Well, I drew it out because I was thinking about it, like how the difference between the two, and like how this one, and this was actually like 14, but I think about how this one could go out to like, if it went to the $20 target on the short term, we would probably say, and October is not really long term, so it's kind of a mixed bag here. But we'd probably say if it hit this $22 target by October, right, like right up to here, that it failed to jump the creek or whatever. We'd be like, oh, it failed. You know, it went back down. It stayed low for several months. It hit the creek. You know, that's great. And then it had to reaccumulate. This is in that case of like a really low, and it probably would be higher than that here, a really low kind of buy back in. And then you get this advancement on RSI, and then it builds out, and you get this nice breakup from like 4 to 22 in October, and yada, yada, yada. This is a completely different scenario. But if you do this and you look at this on a linear chart, it's kind of interesting because it looks like that breach that we just had was the same. It's the same creek. Percentage-wise, it changes the value of it, but it looks like it's already kind of peaked above it and like hit it. And then you can go back and you can actually draw a secondary tops here. You can take this guy and like drag it up higher, and you can see how that actually relates to what potentially happens long-term here, like as a more advanced kind of break, et cetera, et cetera, et cetera. You can keep going back and forth and doing this all day, right? The series of parallels coming down from this pocket right here deserve, I think, a lot of investigation. So I think the parallels that were defined here are more important than the ones, in my opinion, than the ones were up top. I think they're very significant. So that's kind of been my goal the last 24 hours. Going to today, in terms of like short term, I'll be honest, I didn't really have a lot of great expectations of today's price action. I kind of was just waiting to see what would happen. I figured we'd see a reactive move back up this morning. We went higher than expected. We did not hold support up here above 520. I don't think anyone would argue that looks particularly bullish at this time. It looks a lot like an S-curve potentially forming out. So this is ranging. So I'd like to see this range settle, or otherwise I think you're probably going to see a secondary drop. It could be shallow. It may not break through. But at this point in time, it seems like the effort might be to get it below 460. It's a throwback to this earlier mark, 462. From Friday. So at least from a seller's point of view, I think that's the target in mind. I don't necessarily think it gets there, but we'll see. And if that happens, I think it's likely a breakdown. So I'm going to look at 462. I'm going to keep it where it was. I have my alert set at like about 470. But I think that would be a potential breakdown of this flag. And if that were to occur, you might see selling seriously pick up going to 446. But anywho, it seems to me like that's the attempt was made here to advance. We didn't get to the top. So either it's going to have to reaccumulate and have actual stopping power, which AMC has not seemed to have at all in this trend, or it's going to continue down and face potential breakdown. In which case, whatever. We're not like super surprised by that, hopefully, at this point, because we've been talking about it a lot. And we've been talking about how there's a problem with the way this has been setting up, in these up thrusts and sell-offs, and the fact that it looks like a bear flag doesn't help, So if you get a bear flag breakdown, I'm just going to say, like, for now, like, I'm looking at 446 as kind of an end-all be-all. We get stuck beneath here and kind of play with it for a while. At the end of the day, like, stopping power is super important. So if buyers are here and they step in, they're not going to let it slide through the ice. And if they do, then I don't really particularly see any reason to be bullish. So I'm going to stick with that because I still think that's really important. I think that sometimes on AMC, when we have an expectation of a move and we don't see it happen, you're either early or you're just flat out, the move gets absorbed and you're wrong. And one of the things that I remember happening, like with that kind of emotion, was back in December. And I don't know if y'all probably don't recall, but back in December, there was a potential, where was it? Yeah, that range never really struck me as very bullish. But this range had kind of mixed feelings about. And there was a couple moves around December 14th and 15th that were really heavy volume moves where, like, it was kind of coming to the end of a schematic and it looked like you were maybe going to advance. And they ended up being, you can sort of see it now in retrospect, just distributive actions because they didn't hold the support. But there was a high volume. I mean, this is kind of a rinse repeat mode right here as well. I mean, really did the same thing like over and over again until it just kind of dwindled and died. But there were a couple of really high volume moves in this peak that showed possibility of upside and then didn't really follow through. And it reminded me a lot of March because of the fact that we had a near double bottom. And this is kind of what happened in that January. We were just talking about this. This is kind of what happened in that January motif. And then it came low and it bounced out, and then you had the March move. And that's very similar to what we're seeing here in a lot of ways, right? And unfortunately, with the March move, it got down to like that top, and then it just kind of ripped through, ended up coming low. Ended up being a big S-curve and a way of selling off lower. Where we are right now, it doesn't give me a whole lot of like joy to say it, right? Because I know that we've talked about, like, I don't really think it necessarily needs to come down that low. But yeah, I mean, if it follows March and it follows a sell-off motif for AMC, I do think that low target around 190 that's been called off, but then put back on, there's people out there. I think the Nick guy was talking about it a lot. I don't think that's way out of left field. I mentioned that if you go to the next earnings report and you look at that prevailing creek, it kind of intersects way down there. So I've also talked about how going out flat like this isn't always a good thing. A lot of times it just means that you have a really steep drop that follows. And I'm just not seeing a lot here that's making me feel really confident. Like, to me, there's just so many things here that make me feel like, well, yeah, like we're kind of slow, but we're also moving pretty fast on the big picture. So I feel like we got to kind of keep it in check. This really has only been about a week, and it's not that inconceivable that if we were to break down here that we could have a big slide. And in the grand scheme of things, it's really not been that long. So I'm kind of at this point where I'm almost indifferent because I don't really see the strength in AMC right now. This to me doesn't feel like accumulation. I'm trying to just waiting to see if there's going to be a push up. GME is kind of the same way. Like, I don't really have a lot of hope at this point that it's going to just immediately go back up. Long term, I think it could, go back up and fill these gaps. But it's not setting up in a way that makes me feel super confident. GME, to me, looks better than AMC at this point. And I've kind of flip-flopped on those over the last week. Because at first I was like, I don't know. GME looks like it's going to break for the gap. And it did. And AMC kind of stayed afloat. But in all honesty, like, GME is at least trying. I mean, there's at least some kind of a consistent effort in terms of volume to kind of ramp back up. AMC's volume looks like garbage by comparison. It's just super flat, but RSI is getting thrashed around. Just everything about it just kind of smells funny to me. So I'm not sure. I feel like this seems reasonable to sort of chop here if you can't advance on GME. We already got the double flush, so at this point I'm kind of like, whatever. Maybe it's just establishing like a new simple motif, and we don't get up to 40s until after earnings, potentially. I don't know. I'm going to have to work on this because I feel like GME has been a lot easier to read. The technical patterns on GME have been pretty clear, and on AMC it's been a little bit muddier. They don't really seem as obvious. Yeah. And I know I've been kind of flip-flopping, but this, in a lot of ways, like this should have been, if we were going to see this being really bullish, when we didn't come down right here, like this was an opportunity to see an advancement, and it just didn't take it. Like we got pinned. So from that point forward, I've been a lot less bullish short term, you guys, because I just talked about long term, how I'm pretty hyper bullish on AMC long term. I really am. But short term, like this seemed like an opportunity right here to advance, and instead it rejected. And it hasn't, even since jumping over that creek, like it has not advanced. Like it's still doing the same crap it was doing last week. So, and in some ways it looks weaker. It just seems like a series of upthrusts to try to get back up into a supply zone. And that's not a positive sign. Like until you find that support, that's really what this reads to me as. It's just like a retracement back up and just a failure to find that support. So it is what it is, We can't change what is happening. Every other day it's been like this on AMC, where we go into pre-market or after hours, and then in after hours you get some big push and you're like really excited, and then it opens and it dumps, or vice versa. You know what I mean? Like it's been like the same thing, but in reality, in just bare bones facts is that we've been kind of like just coasting up on a lot of trends, on some EMAs. We're kind of just camping out, and we're basically just been pushing up into this resistance zone, and we are advancing like slowly, but we're not really finding that support has been very good. Like we're not able to find support above certain levels. It's been the same thing like over and over again. So I may not be able to catch it, I may not be able to catch when it actually takes off, or when it drops. I get a feeling, I don't know why, I get a feeling like it's going to happen in after hours, and I'm not going to be able to tell you like ahead of time. So I can't give you like financial advice, but plan accordingly. Like either could happen, and I think it's likely going to happen in like a after hours or pre-market. I would be surprised if we got to see it break down or break out at this point. All right, hang on just a second. My son's at the door. All right. When will you know? Well, I don't know. I don't think the price target I got for AMC is more. I don't think doesn't feel as definitive to me as the one that I did for MPW, because the MPW one is very clean. I don't know how to describe it. AMC is a little more of a mess, and I might just need to, again, go back to those anchor points and see what I can find. But there's a intellectual integrity there. Like, if you find something that's not appealing, you're gonna have to just deal with it. So I haven't gotten there just yet. What I did do is I looked at those markers as they relate to the midpoints. So like the 2-year marks. So it's 201 weeks, and I know it's about 4 years and it's about on the election cycle. So that's a given. But what I did is I looked at those bottoming periods as they related to the midterm, and then they related to the end. But if I'm just being honest, like, I don't feel like I've used it. Like, I don't feel like I'm done. So I don't know if that target is the best target, the 54. Like, it could be there's a better one. And frankly, this chart's kind of a mess, as you can see. I was doing a lot of what I feel is like triangulation. So I was trying to see what was the most comparable. In reality, again, with MPW, it was like super clean. Like, each of these clearly indicated direction, clearly indicates the next intersection. It's not even a question in my mind, because it's literally like it points to the price of the close on that date, on the next date available. So it was like each one was like perfect. I don't think I found that same exact kind of perfection on AMC yet. Like, I just haven't put my finger on it quite yet. I think it's there. The first one is really clear. It's evident. There is, right around this top, there is every indication of that trend. Like, it's there. It's got multiple hits right on it, right on that peak back in 2016, 2017. And then not only that, but it's respected on the way down. It doesn't matter if you're looking at linear or logarithmic, it's still respected. And then it does cross over on the closing value on that day for, 201 bars later. But the problem is that's kind of inverted, because technically on MPW, this was a high point and it should have been a high point turnaround, right? But AMC looks like a low point. The problem is, and this is where I'm kind of getting at, this is what I was trying to say a minute ago, and I went crazy on it. The problem is that I think AMC corrected, and I think GME probably did too. I think they both went from like a bearish scenario. So it's like, it's not that somebody flipped a switch, but it's more like, I think that there was always a plan that this was going to correct. I really do. I think if you look at the value of the 618 on the breakout of the wedge, it should have corrected. Not all the way up to new all-time high, but it would have corrected pretty far. So I think that there was an intentional drive away from, you can see it in the RSI look at the divergence here. Massive divergence on the weekly between August 17th, 2017 and like this November bottom. There's a very clear upswing during that wedge down. That's what you'd want to see in a wedge breakout. So I think, regardless of what anyone else thinks about the nature of GME and AMC, at least for AMC, I think it's there. I think that it's more probable, though, that the design was to kind of keep it at the 618, which is a more typical retracement for a wedge. And if I had measured this originally and I thought it was going to break out, I wouldn't have thought it would go beyond, well, this says 145, but I guess back in the day it would have been a different number, I would have expected to reach this initial little hook value from way back in 2014, and that would have been probably my target. So I think the wedge was always there. I don't know how else you could see this, but I think this is a corrective measure then at the top. And so it gives me the feeling that, like, maybe you see something similar in a corrective measure going into the next up cycle as well, but that's pretty far away. And really, we don't have any way of knowing, aside from what I'm saying with this whole like up and down business, exactly what this bottoming might look like for AMC. So what I need to do is I need to go through and I need to identify the markers around this time period. So you keep it simple as you want, but basically there should be markers around each of these that kind of tell you where the next bottom should be, right? And I wouldn't be surprised if it is pointing down from this point forward. I guess the question that I have is, should I use this bottom or should I use the bottom? Like, should I still use the November date if I think it was a corrective measure? I haven't answered this yet. Should I use November of 2020 or should I use the December of 2021? I don't know. Because we already, like I said, this is technically like the up target. Like, I don't know exactly what this was, but it was targeted. So I'm kind of curious. If we're being really strict about the rules, then I would say that there should be an indication of where, like, some trajectories in and around November of 2020 would tell you where you're going to end up. I don't think it's that unreasonable that what I've already picked out is probably pretty accurate. And you can see why I think that, because again, we've kind of passed through this region. Like, remember I said the 50% usually gives you some indication you kind of touch those trajectories. Those would be really high though. Like, there's a lot back here that could be potentially like really far up, like way up here, like 107 or 100 or something, you know, like, and then I know people are going to ask questions about so it's difficult. MBW has a really simple one, and every 50%, every 2 years, in between these almost 4-year cycles, you get kind of an indication you're back to that trend, except for the first one. But that's a lot of time. I mean, that's at least 16 years of data that it has happened that way. AMC doesn't have that kind of data. So if I'm just kind of generally saying the same thing, then yeah, it did do that. Because like, here's the 2-year cycle. Did it revisit the trend after 2 years? Yes, it did. So there it is. You know what I mean? So I'll have to kind of break it down. I went a little crazy with targets, so I might want to clean my chart up, and I'll do that, and I'll break it down again. And I'll see where that next 2-year mark is and see if there's any indication that it's returning back to, you know what I mean? It's kind of weird too, because if you look at this over the course of every 2 years, there's not that much movement here. It looks crazy. They even start at the beginning and kind of look at every 2 years. Like, yeah, there's a lot of movement down low here, but then if you look at the next kind of cycle up, it's not that much movement. You know? Like, overall, it's a pretty much like a straight line, except for this massive push up. That might be a way of balancing the books, like institutional balancing of the books. So, yeah, 450 again. Yeah. There we go again. Yeah, so didn't surprise me very much. I would say if we get to 450 this week, that's bad. I don't see how you could get there without breaking down. You could get there breaking down and not breaking the ice. It could be like this, where you come low into Friday and you don't actually break break through the ice. So it goes up, distributes again, comes down, but it would be like a breakout of that flag. And then potentially Monday or next week, you end up breaking down again. It wouldn't surprise me. Something like that. So we'll see. We'll see how it ends up. Yeah, so part of me wonders if like they're returning back every few years to a similar kind of equilibrium. And that's all I think. In some ways, that's all I think I've identified is just kind of a main trend. A lot of these are pretty close together, with a couple exceptions. I think when you have these really hyperbolic, crazy moves, that's an opportunity to make a lot of money, one way or the other, when it's pulling away from those trends. So the closing price, AMC, it looks like 489. At least that's what it says here on TradingView. TradingView's historically gotten it kind of wrong sometimes, so I could be a little off. It doesn't update for some reason. I don't know. Are they getting their data from different exchange? I don't know. Than Webull and stuff, because people always say it's different. I wanted us to close above 24.20. That didn't happen. We're at 23.78. We did close above 23.40. It did seem to find support again on that upswing. That's what we were talking about earlier today. So that's a positive. There's not really much else to say about it just yet. We'll have to wait and see if it holds. If it doesn't hold, this is basically like a perfect 50-50 swing down. Yeah, roughly, to get back to the gap. So it could just be like a break point. We'll see. I would imagine that we're going to see upside again. I don't know. I just get the feeling we may see that upside again tomorrow. I could be wrong. Back up to like 24.20 and then break down from there. So do like a full-on caddier kind of thing up top. And then maybe head back down. And we might see something similar on AMC where we get a move back up to like 5 and then break down later. Yeah. Charge point end of the day low. Not much to say. It's just kind of wrapping around the major creek. IWM went for what looked like a gap fill. It didn't get it. I wouldn't be surprised if it did go ahead and go down and gap fill. That could be a positive, though, for small caps. It's made a higher RSI hit on this pullback. We came back lower. I could see it like still moving pretty far even after. I still believe it's going to end up at like 208 sometime soon, and then probably in the FOMC we're going to see some action. So overall, kind of a nothing day for AMC. It's up 1%. Unfortunately, that 1% probably going to look a lot like a big gravestone type candle because of the nature of that wick. I'm not looking at the daily, but it's an assumption. The gravestone is not usually like super bullish. It's usually more bearish than bullish. Actually, it doesn't look that bad. It doesn't look like a gravestone at all. Oh, that's right, because we wicked down in the morning. Never mind. All right, never mind. So it's just kind of an indifference candle. Maybe a little more down than up. Yeah, never mind. Got that wrong. Yeah. Man, I don't know. It's really just coasting. To me, it looks like it's primed for a breakdown. Bulls could use that to their advantage with a quick dip and then a recovery way back up above 545, but it needed to be a really concise move and then hold. We just haven't seen it. So, yep. All right. That's all I got for you. I'm going to keep working on this other stuff, but for now, that's the day. I hope you all have a good one. We'll talk to you later.